You want to start something big in FinTech. Awesome. Take your startup to an accelerator in New York or San Fran, spend all your seed money, and make connections with some mid-level influencers. Or we can tear down that paradigm, make our own rules. Go to Little Rock. Yeah, Little Rock, a.k.a. Best Night Everville. Buckle your helmet town, the land of Opportunity City. And yeah, we're FinTech Central. Central Arkansas is a ground floor FinTech innovator with progressive companies dating back to 1968. Today, global game changer FIS is powering the VC FinTech Accelerator at the Venture Center. We're the only FinTech accelerator that guarantees access to FIS C-suite leadership and the opportunity to plug into its global business network. That's not bragging, that's fact. VC FinTech Accelerator. Rock the paradigm. Rule the world.
Welcome to the VC FinTech Accelerator, empowered by FIS Demo Day 2017. Ladies and gentlemen, please welcome Lena Moore, Deputy Executive Director of the Clinton Foundation.
Thank you. Good afternoon. I've been given the honor to welcome you all to the Clinton Presidential Center, so welcome. We feel truly privileged and grateful that you chose to host the Demo Day for a second time this year at the Clinton Presidential Center. I want to recognize some very special people who have been involved and have supported the program: Governor Asa Hutchinson and Congressman French Hill, Mayor Mark Stodola, and of course we have our FIS CEO, Gary Norcross, and we have, who you will be hearing from shortly, the Venture Center President and CEO, Lee Watson. And I must congratulate the 10 CEOs of the innovative startup teams who were selected out of 295 applicants, and it's my understanding that's twice the number of applicants that they received the first year. So congratulations to you 10 CEOs. That is amazing. We are extremely impressed by the success and the impact that this program has already made so quickly in a short period. So congratulations to that. It was our mayor, Mark Stodola, who stated that the Venture Center has the intellectual framework for 21st century job growth. And it was our own Governor Hutchinson who proudly stated that Arkansas, there's no other state better preparing its people and the workforce for opportunities and careers in the 21st century. And here we stand in the Clinton Presidential Center, where President Clinton, his foundation and the theme of his presidency was around building a bridge to the 21st century, a bridge to opportunity, a bridge to instill responsibility, and a bridge to strengthen community. And this program encompasses all of that. And President Clinton, all that he learned while building a bridge with others to the future is written and captured right here in the Clinton Presidential Center. And he always envisioned opportunities and experiences just like this so that you could walk away and write the next chapters of that great story that is America and our global community. So I have 10 pins with President Clinton's name on it, excuse me there, for the 10 CEOs, because you are truly an inspiration. And we want you to use these pins because others will also be able to learn from you. And I hope we have a picture up here. My Executive Director, Stephanie Street, unfortunately could not make it today, but she did have the opportunity to host the CEOs earlier this summer. And she, along with all of us, we just want to say we wish you much success and best wishes to an even more successful future. So thank you very much.
Ladies and gentlemen, please welcome Lee Watson, President and CEO of the Venture Center.
Can you give those 10 pins? Can you make the 10 pins give to the CEOs as a gift? Thank you.
Ladies and gentlemen, and honored guests, welcome We've got an amazing program in store, but before we start, please allow me a few moments to update you on the progress and growth of the Venture Center. The Venture Center is made up of entrepreneurs, mentors, and partners, all dedicated to the growth and support of a strong entrepreneurial community. From ideation, where individuals explore entrepreneurship, pitch their ideas, compete in hackathons or network with others, to cultivation, where the focus is placed on business model design, customer validation, and cultivating that idea into a business, to our third stage, and it's all about acceleration. Here we focus on sales, go-to-market, all while continuing to test, refine those business models. All of our programs are supported by a rigorous mentor program made up of trained, seasoned professionals. In the 3 years since we've launched, we've added over 300 members, trained 76 mentors, we've screened 885 ideas, and conducted 1,590 mentor sessions. That's actually up double from December. But more importantly, we've seen some real success. Our first member, Aptigee, recently announced a $5.7 million Series A and the addition of his 50th employee. Justin, to you and your team, congratulations. Our companies are generating revenue and creating real jobs. Fun little animation. So they've now raised $38 million in capital. That's up from $19 million this last December. Created 445 jobs, up from 286 6 months ago. And these numbers don't just represent the hard work happening at the Venture Center, but the hard work from our mentors, partners, and our city. If you have been involved with the Venture Center as an entrepreneur, a mentor, a partner, or in any way involved in this community through any of our programs, please stand. Thank you. And finally, the Venture Center team is made up of individuals who are dedicated to seeing the success of these entrepreneurs. It's my pleasure to introduce them to you now. Come out from wherever you're hiding. They're all over the room. Ladies and gentlemen, Jessica Johnston-Meyer, our Director of Programs. Jennifer Thompson in the back is our Marketing Communications Director. Ashley Jones, who many of you know runs our mentorship and membership programs, is our Community Champion. Wayne Miller, our Managing Director for the FinTech Program, and Brian Bauer, our Program Manager. Collins Andrews is right here. Collins is our FIS Executive in Residence. And of course, many of you know James Hendren, our board chairman. James unfortunately couldn't be here, but he's having a lot of fun with the Boy Scouts at the National Jamboree. Let's give this small and dedicated team another round of applause. And finally, I want to thank all of our corporate partners, and especially those whose contributions directly support the VC FinTech program and today's demo day. To FIS and the state of Arkansas, thank you for your support and for being a fantastic partner. Together, we are leveraging our legacy in financial services, building a community, a place for entrepreneurs to thrive, to disrupt the industry, to bring bankers and fintechs together, all connected to the world's leading fintech, FIS. To Gary, Rob, and Jack and team, thank you. And lastly, if you know me, I've got to hit you up for some money. Each year we put together an investment fund. It's about $1 million a year. We'll invest in all companies. And we'll look at the end of this program and in the next few weeks at sort of these best performers, and we'll make some follow-on investment. And there's a little bit of room left, so if you'd like a piece of the action, please email me or find one of our team members afterwards. All right, we're really excited today. We're going to have a lot of fun. Now to review the VC FinTech program, please let me introduce you to Brian Bauer, our program manager.
Thank you, Lee. Thanks, Lee. All right. 51 weeks ago, many of us met in this exact same room as we introduced the 10 companies of the inaugural cohort of the VC FinTech Accelerator, and they presented their solutions. Today, I'm happy to report on some of the progress those companies have made, and also happy to report on some of the progress the program has made. So the first thing I'm happy to report is that all 10 companies are still out in the market, generating revenue, closing customers, closing strategic distribution deals, and raising capital. And the Venture Center continues to act as an advocate and a partner for each and every one of them. Collectively, they've raised over $14.1 million in capital. And Flutterwave's API is live in 4 countries in Africa, is expanding to 7. They've generated a lifetime revenue of over $3 million, $2.2 million of which is just in 2017. So that company's going to have an outstanding year this year, and we couldn't be more thrilled. 5 have been recruited to other competitive programs, including Plug and Play FinTech in the Valley and also Y Combinator. In February, Akuba was endorsed by the American Bankers Association as a preferred small business lending platform for banks. And Monado recently closed the largest bank in Finland. Dream Forward's 401k platform is now in the hands of over 300 financial advisors. And last but not least, Lumo Exchange and Mortgage Peer Network have both chosen Central Arkansas as a place to grow their companies. So that's a win for the state. In the spring, we attended the FIS Connect and InfoShare conferences with the companies. That is FIS's premier solutions events. And those founders were then exposed to over 2,000 decision makers at financial institutions from across the country. And now to update you on some of the progress this program has made. Last year, we had 150 applications from 30 countries. This year, we set the goal at 200, and as you've heard, we broke that goal and hit 295 from 39 countries across the world. And so from that 295, we filtered it down to the 10 companies that you'll see today, and I'm going to tell you how we did that. It started off with a comprehensive review of all 295 applications, and then we invited 75 to interview. And with those interviews, we conducted over 150 interview sessions over the course of 3 rounds. And with the help of FIS, we sorted that down to 30, and then finally to the 10 that you're going to see on this stage here in a few minutes. But before you see those companies, I would like to introduce Wayne Miller, Managing Director of the Venture Center, and he's going to tell you a little bit about what we've been doing over the last 12 weeks.
Thank you, sir. Thank you, Wayne. Thanks, Brian. Good afternoon. Great to see you all here in Little Rock. So in the next few minutes, I'm kind of the last person you're going to hear from. I only have 321 slides to go through. It'll be fast. We're going to show you 10 companies who I think have truly demonstrated dedication to this extraordinary program and collaboration between FIS, this financial community, and the Venture Center. You know, it's been a fast and fun and hardworking 12 weeks. We have definitely worked hard, but we've also played hard. You know, when we started back in May, we talked about sort of the 3 key ingredients that make this program function, and that is content, connections, and investment. So let me talk a little bit about content to start with. Each of the 12 weeks starts with a theme. For example, we tried to look at things like how to build a lean startup to maximize the runway that these young companies need. We look at building strategic relationships to help them enhance their go-to-market strategies. We focus on metrics and KPIs, so we teach them how to measure success. We look at things like marketing and growth hacking to make sure that the understanding of what they're doing is out in the marketplace and people can help them validate. We talk about things like compliance, regulation, and the things that are important in this industry. We also try to create an environment where teams can fail fast and pivot and excel, and it always brings a great quote to mind. You know, we can't always control the wind, but we can learn how to adjust the sails. So we try to create an environment where we can embrace failure, capture the learning, and adjust. We lean hard into helping these companies from the standpoint of business development. Half of my life and my career has been dedicated to that. And the greatest challenge that these young companies have is crossing that initial chasm, getting their products to market, and truly getting sales to occur. Because as we all know, nothing happens until somebody sells something. As we look at connections, it's been amazing, right? Banks, and more banks. These teams have had exclusive access to dozens of executive leaders at the highest ranks of banks and organizations like FIS and others to really have an opportunity to get them to vet their products and services and answer the question, does my solution help? And will people actually pay for it? Over the past 12 weeks, over 100 executives, mentors, subject matter experts, and have dedicated themselves to helping these young companies. accelerate their growth while disrupting an industry, yet working to enable financial institutions to better serve their customers. Thank you to all of you who have contributed. Lastly, we look at investment. Today you will see well-formed ideas that have turned into real companies where critical thinking abounds, and the distillation of these 12 weeks will be presented to you today. I'm honored to have worked with these guys. I consider them to be my peers and my colleagues. So there are thousands of horses in this FinTech race. Knowing which horse to bet on is a real challenge. At the end, it usually matters who can execute the best. I'm pleased to present you in just a few minutes with the 10 from the VC FinTech 2017, and I'm confident there's some winners here to bet on. Thank you very much.
Ladies and gentlemen, to introduce Alto IRA, please welcome Byron Smith, principal at Mountain
12
Group
weeks ago,
Partners.
10 companies traveled to Little Rock, Arkansas to stake their claim in the birthplace of financial technology. And the second year of the VC FinTech Accelerator began. Made possible by the generous support of FIS, the state of Arkansas, industry leaders, and the local business community, the Accelerator program is curated and led by the Venture Center. But meaningful innovation requires more than just capital. That's why the Venture Center has developed an extensive network of people, programs, and resources. We help early-stage businesses refine their business model, create a product that is market-ready, and ultimately connect to customers and investors. And we are proving you don't have to be in New York or the Valley to make that happen. In fact, we are the only FinTech accelerator that guarantees access to FIS executive leadership and the opportunity to plug into its global business network. We have bootstrapped our operation for maximum impact and are committed to keeping the needle moving forward. Chosen from 3,000 applications from all over the world, the 2017 VC FinTech cohort is redefining FinTech. Our founders have gained access to industry experts and made connections with key decision makers. We set out to create something special. Real companies with real growth. A program with real impact. We succeeded. Ladies and gentlemen, we are proud to present the portfolio companies of the 2017 VC FinTech Accelerator, and they can't wait to meet you.
All right.
Good
Once
afternoon.
again, please welcome Byron Smith, principal at Mountain Group Partners.
Good afternoon. I'm going to start with a question. How many of you have ever written a personal check in a seed stage investment? Not many. Okay, good. Because I want to tell you how scary writing a check is to a seed stage investment. And I want to tell you why I was happy to be an investor in Alto and with my good friend Eric Satz. So seed stage investing is a little bit like the painter George Seurat. For those of you who don't remember from your Western Civ days, he was the guy that painted paintings one dot at a time. None of the dots connected. He was the guy after Impressionism. So if you stand back, you get the vision. You see what it is. It's beautiful. It all comes together. But the hard part is finding not the person that can tell you what it's going to look like. The hard part is finding the person that can tell you, I know how to put every dot where it needs to be, and there are thousands of them. There are thousands of them. And my friend Eric Satz, who is the founder of Alto, is great at that. Eric has a tremendous background. He started out as an investment banker. He's an investment banker I actually like, which, for those of you that have worked with investment bankers, he is both an entrepreneur and an investor himself. Eric and I are invested in about 8 or 10 startups together. So he runs his own venture fund. He knows what it's like from the investor side. He is a serial entrepreneur. He has had successful entrepreneur experiences, and he's had failures. I taught entrepreneurship at Vanderbilt for a while, and what I used to say is the difference in people in Silicon Valley and people in Nashville is that the people in Silicon Valley are not afraid to fail. They view every failure as a learning opportunity, and they're worth more the next time. And we love to invest with people that have not had all, perfect success in entrepreneurship, but have had some bumps in the road. Eric and I have invested together and succeeded, and we've invested together and failed. And I can tell you that this idea is one that we really like and that we think is going to be a tremendous success in the fintech space. I'll leave, and before I bring Eric up, I'll leave with one more thing. You heard before this whole idea of adjusting. When we raised money for our last venture capital fund, we had a very sort of unusual sales pitch. And our sales pitch was this: we're going to be wrong about every idea and we're always going to pay the wrong price. You should give us your money. Now, we say that and we follow up with, we try to be right about the problem that exists, and we try to be right about the person we're going to invest in. Because you're always investing in a person as much or more than you're investing in the idea. And that's why I'm happy to be a part of the Alto team. I think you're going to enjoy hearing about the problem Eric identified and the solution he found. And I'm here to tell you that we actually, in the world that we live in the venture capital space, we see people all the time that need this solution. And so that I will introduce you to my friend Eric Satz, who is a great entrepreneur, a great investor, and I'm going to say an artist when he's creating Alto.
So, thank you, Byron. Only really good friends will agree to drive 10 hours round trip to support 10 minutes of presentation. And my family, who's watching back home via live stream, is going to make hay with your artist reference, because they're real artists. So if anybody, by the way, has ever enjoyed a Lover's brand pizza from Pizza Hut, you can thank Byron for that. And if anyone owns cell phone insurance, Byron will thank you for that. My name is Eric Satz. I'm the CEO and co-founder of Alto IRA, where we make it easy and affordable for individual investors to use their tax-advantaged savings to invest in what they know and who they know, tax-free. We are in President Clinton's house, so I'm going to say that's not no new taxes, that's tax-free. 1 month after we began development for the Alto IRA platform, Sam Altman, who is the president of Y Combinator, probably the most successful accelerator in the country, tweeted out, "Only letting me invest in my 401k in mutual funds is like regulation-supported stealing of 1.5% of my money." I could not agree more with Sam. Could the folks in the back please blow up the front pics? Peter Thiel made what is possibly the most successful self-directed IRA investment ever. He took $500,000 from a Roth IRA, thank you, and he invested it in Facebook, generating $1 billion. Now, my challenge to everyone here today is to beat that. Now, it's possible, because you don't need $500,000 to beat that. Returns are relative. With $50,000 invested in one of the companies that you're going to see today, or more of the companies you see today, all you have to do is return a little bit more than $100 million, and you become the top dog. So I came to Alto the old-fashioned way, kicking and screaming. My first self-directed IRA investment was easily the most complicated transaction closing I had ever executed in 20 years. And so I was complaining about the process to my co-founder, Rob, at which point he shared with me his own self-directed IRA experience, to which I said, well, why don't we fix this thing? To which he said, well, is it big enough to fix? Well, it turns out it is. 90% of all savings in the US live in tax-advantaged accounts. That's nearly $25 trillion today. Alto does for self-directed IRA investing what TurboTax did for self-filers. We democratize the process, we make it affordable, we make it easy to understand and follow. So we mentioned $25 trillion sitting in IRA and 401k savings. It's a big market. Less than $300 billion, less than 2% of that amount today is invested via self-directed IRAs. And yet demand for alternatives is exploding for two reasons. One, because historical returns in alternative assets outpace over the long run historical returns in public assets. The other reason is because investor preferences are changing. And what you see up here is projected growth in alternative investments over the next several years. This demand is being fueled by a couple of different factors. The first of which is an $11 trillion generational transfer of wealth that's taking place between now and 2025. That's going to create 25 million accredited households. The other thing that's driving this change is a new favorable regulatory environment. The Jobs Act, and specifically Title III of the Jobs Act, allows private companies to take unaccredited investor money as long as they're raising that money through a funding portal. So if anyone's ever heard of AngelList or CircleUp or Seed Invest, right? Those were created to attract retail investor dollars. Guess what? There's virtually no retail investment happening on those platforms. It's all institutional. Why? Because all the money, retail money, 90+%, lives in tax-advantaged accounts, and those crowdfunding platforms can't scale to process this type of investment. Today's process for self-directed IRA investing, paper-based, time-consuming, expensive, riddled with unknowns. If you've never done one of these before, very hard to figure out. So in just 3 steps, the problems that we're solving for: education, complexity, and cost. When I made my first self-directed IRA investment, I did what most people do. I went to Google and I asked if you could do it. Turns out you can. So I called my advisor and I said, hey, I found a use for those IRA funds. And his response was, that's nice, go find a way to do it. Not here. And so that's what I did. I found a way to do it. And the third thing that I realized in the process was that the fees are so high that most people can't afford to make this type of investment. This picture is meant to be demonstrative of a process where the burden of making this type of investment falls all on the investor. I had to manage communications with the custodian, with the company receiving the funds, with lawyers, with accountants. It took probably 50 emails and 6 weeks to do my first investment. Had I not been on the board of the company, they wouldn't have waited. The consumer value proposition is easy to understand, right? Self-directed IRAs made easy. A simple cost structure based on activity, not asset size. If you use TurboTax, they don't say, how big is your filing? We're going to charge you X. They say $99 per year. And that's what we do. So this is my Gartner Magic Quadrant chart without Gartner involved. Fully automated, low cost. If you remember nothing else, remember this slide. This is the secret sauce. Investors come to Alto because they have a company they want to invest in. We invite the company to the platform in order to make the processing of the transaction easy to manage. We create a virtual document library for them. Companies then invite other investors to the platform who want to make self-directed IRA investments into their particular company. Turns out most investors who do this make 3 or 4 investments this way. So what do? They have a good experience, they come back, they invite more companies. Those companies invite more investors, and so on. Instead of a company having to process 5 to 10 different transactions, they process 1 transaction with us, 10 different investors. In addition to going direct to consumers, we'll partner with banks, brokerage firms, wealth management, and RIA platforms. Very easy to understand revenue model. Transaction fees, recurring asset maintenance fees, and recurring valuation fees. Back of the envelope math. We think with an easy to use, easy to understand, cost-effective solution, we can facilitate $2.5 trillion of investment via self-directed IRAs over the next 5 to 10 years. We assume an average asset size of $50,000, which means 50 million assets, $100 annual asset fee, $5 billion revenue opportunity annually. This creates an attractive customer long-term lifetime value where we could, to achieve a 4-to-1 LTV to CAC, we could actually pay $656 to acquire a customer, but in reality, based on $5,000 we spent in a Google AdWord beta for 7 days, attracting 400,000 hits, we believe the actual number to attract a customer will be $300 or less. If you remember anything from this slide, 0.22% of $5 billion. That's what we need to do to hit $11 million in year 3. I'm also the co-founder and managing partner of Tennessee Community Ventures. I was the co-founder of Currenex, which was the first online foreign currency exchange business, which State Street bought in 2007 for about $560 million. But probably most importantly, I'm on the board of the Tennessee Valley Authority, the largest utility in the country. We serve 7 states and 9 million customers. And I say probably most important because the other thing I do is I teach entrepreneurship 1 night a week to high school students who every single week, every single night, continue to amaze me. Thank you for listening.
To introduce Quotanda, please welcome Skip Rutherford, Dean of the Clinton School of Public Service.
Thank you. My name is Skip Rutherford, and I am Dean of the University of Arkansas Clinton School of Public Service. We're the world's first to offer a Master of Public Service degree. And our students come from all over the state, the country, and the world, and work all over the state, the country, and the world. We have 35 students working in 17 countries this summer. And in my experiences as dean over the years, I have seen many qualified international students unable to come to school, not only at the Clinton School, but at other institutions in Arkansas and all over the world, all over the country, because they simply can't afford it, particularly those international students from impoverished countries. And so for several years, we have been looking for innovative solutions to help these talented students to get here, to get an education, so that many of them can go back and uplift their countries and bring prosperity to places in the world that so desperately need it. So meet Grant Taylor. Grant and his company at Quotanda has developed a unique international student loan origination and servicing plan that can really change education throughout the world. It is a concept whose time has not only come for us at the Clinton School, and we're certainly exploring it, but for higher education in Arkansas and America. It is something, ladies and gentlemen, that higher education has been looking for, asking for, and right now we have the opportunity to grab it. Grant is experienced in innovation in finance and education and entrepreneurship, but he also runs triathlons, is a premier kayaker, pretty good soccer player, and his results, and by the way, is a rescue scuba diver. What I'm saying is that not only is he high performance, but he is high energy, and he delivers outcomes. He is worth believing in the future. And so, thanks to FinTech, thanks to the Venture Center, hopefully now he will have the opportunity to uplift thousands of international students who will have the same opportunities to get an education in America as American students do. Ladies and gentlemen, meet Grant Taylor.
Thank you. Hi, I'm Grant Taylor, CEO of Cortanda. We are the global gateway for student financing. We provide banks and universities with a lending-as-a-service platform that allows them to efficiently manage student financing solutions, both for loans and scholarships. So let me tell you a little bit about myself. I went to business school in Spain, where I found 90% of my classmates were unable to finance their education. Those were the non-Americans, and I decided to fix that. This is a large global problem, but let's just take Mexico as an example, right? We're solving the problem of limited student financing. In Mexico today, only 2% of college-age youth have access to education financing. That's shocking coming from the US. What's also shocking is that of the 3.5 million students that are able to study anything beyond high school, 35% of them drop out because they can't get access to education financing. So this is the big problem. Banks and universities don't have the tools to efficiently manage student financing programs. They have limited underwriting capabilities, and it's a people, paper, and time-intensive process, otherwise known as expensive. And it leads to a failed customer experience. So this is what it feels like for the student. It's also terrible for the bank. Again, people, paper, and time-intensive. So there are a couple of examples of programs student financing programs that are being run in Mexico today. One is a bank that offers loan programs at 4 of 2,000 universities. Why is that? Because it's done the old-fashioned way. And limited underwriting with a FICO score, most of those students are rejected. Also, there's a university that's grown quickly by offering broad financing options, but they also have poor underwriting capabilities and poor servicing capabilities, and it leads to 45% default rates. So there is a solution to this, and that solution is Cortanda. We provide a lending-as-a-service platform, online loan origination and servicing that's mobile-enabled, fully digital, with automated underwriting for immediate loan decisions. We also provide specialized customer service. This is fully white label, so it looks like the bank brand at the top or the university brand at the top. And the university or the bank sign a loan contract with the student directly. So existing solutions, those people, paper, and time-intensive processes take weeks for a loan decision. With Cortanda, this takes just a few minutes. And again, it's fully mobile-enabled and digital. So one thing I'd just like to reiterate here is that this is not about the student loan or the margin on that loan. This is about establishing a lifetime relationship with a student that, again, has a tremendous lifetime value. So this is not just about the margin on the loan, it's about that lifetime relationship and potentially the relationship with their children as well. Millennials are the future of every retail bank. This is a massive global market, $6.2 trillion worth of tuition spend annually, and that's growing at 10% a year. So in Mexico alone, Cortanda's revenue potential is over $1 billion a year. Why now? Mobile penetration is massive. Over 60% of the world now has a mobile phone. Students are far more likely to have a mobile phone than they are a computer. So it makes sense that you give them a mobile-enabled application. And actually, you see 55% increases in application rates with those mobile-enabled financing options. And yet, less than 1% of bank loans are mobile-enabled. That's a big problem. So this is something that inspires me. Lending as a service for student lending has been introduced in the US, pretty much exclusively. So what happened in the US? This is what the US looked like 12 banks dominated student lending in the early 2000s. And then lending as a service was introduced, and literally hundreds of lenders launched loan programs because it was easy to do and they had the tools to do it. SoFi is a great example of a lender that launched on a lending as a service platform. So Cortanda is excited to bring this capability to the rest of the world. It's multi-currency, multilingual, and we can launch student financing programs anywhere in the world in a matter of weeks. So we bring banks and universities those tools that they need to offer these financing programs, including dashboards that are customized to show them full drill-down capability to borrower-level data, as well as the high-level details on how those portfolios are performing. We also provide an exceptional customer experience for the applicants and the borrowers. Again, that's that fully mobile-enabled application process. It's responsive design, but it's end-to-end. So it's all the way through to that electronic signature, and again, they can do that in just a few minutes. And then as a borrower, they can log in, make a payment, see their amortization table, look at their statements, and see all relevant information about that loan that they took, or loans. So these are a couple of our awesome examples of existing Cortanda-enabled borrowers, right? So Sergio was able to multiply his salary by 5 times with the loan that Cortanda helped him get and allowed him to study an MBA program. Jessica went from unemployed in Spain, a country with youth unemployment at almost 50%, to after a 3-month short course that we helped her finance, to getting a great job as a junior web programmer. These are awesome outcomes, and these are the type of outcomes that we want to enable for the rest of the world, literally millions of students. So we've launched 4 loan programs as of today. Those are in Spain and Mexico. We've provided or originated loans of $820,000 to students from 17 different countries, and there's a default rate on those portfolios of less than 1%. How do we make money? We charge a loan program setup fee, loan origination fees, that's on a per loan basis, and loan servicing fees, which is per loan per month throughout the life of the loan. So we have an ambitious global expansion strategy, and that is direct sales, which we continue to make, as well as channel partnerships with great partners that include school associations, as well as hopefully soon core banking partners. We've got also an awesome pipeline today that's over $60 million in recurring annual revenue if we can land all the deals that we have in our pipeline, and that pipeline continues to expand. We've got a dedicated team. I come from a finance background, having worked in fund of hedge funds and venture capital. Lino brings deep operational expertise, having worked in Coca-Cola and Iberdrola, and we've got a great team of developers in both Spain and Mexico. We also have some of the most experienced investors and advisors in the business. FIS speaks for itself. Bill Hubert really pioneered this business model in the US, the lending as a service business model in the US, originated loans for hundreds of different lenders all across the US, including SoFi. And Enrique Prieto was running the top student lending business in Mexico, which was direct lending on old technology, and did the only 2 student loan securitizations that have been done in Mexico. Tigre built Open English, a top education technology platform. It's now worth $350 million. We also won Village Capital's FinTech program and have investment from top FinTech VCs. So this is where we plan to go over the next few years from a financial perspective. In 5 years, we plan to be making $73 million in revenue per year. or year 5, I guess I should say. But excited about that, and excited about also raising capital now to allow us to do this. So if you're an investor or a potential partner, bank partner, or school partner that would like to come talk with us, please come meet with me after. I'd love to go through an actual demo with you. And one thing I'd just like to say, please do join us in expanding access to education. Thanks very much.
Introducing Omnitrium, please welcome the president of Stone Ward and Venture Center board member, Millie Ward. Oh, no. Or Cinderella.
Okay, my name is Millie Ward. I'm president of Stone Ward, and we are a marketing and advertising agency. We've been around for about 30 years, and for most of those years, we've had bank clients on our client list. So I've spent many an hour struggling with bank marketing directors to figure out how to create real new customer growth. I know how hard it is to get a new bank customer and how valuable they can be to a bank. That is why I am very excited about Omnitrium. Omnitrium is a head-turning, deposit-driving idea that I think is relevant to the times and compelling to its target audience. Omnitrium literally makes a game out of opening a savings account and growing it. And it is a game that everybody wins. Rosemary Hackett, the CEO and founder of Omnitrium, is a saver herself. She appreciates the power of saving money over time and what it can accomplish for your life goals. She is also a former CIO, a very good one. So in her product, she has created a platform that is both seamless and simple for banks to license, brand, and market to drive new savings deposit customers and grow those deposits. So, if you're a banker in this audience and you've been looking for ways to appeal to that younger target, then you are going to be interested in Omnitrium. And if you're an investor, once you hear Rosemary's statistics and understand the market potential of this product, I think you will be as interested too. So it's my pleasure to introduce Rosemary Hackett, Omnitrium.
Thank you. Good afternoon. I'm Rosemary Hackett. I'm the CEO of Omnitrium. I'm from Chicago, Illinois. I have more than 20 years leadership experience in a variety of companies. I worked at Accenture for over 10 years. But one of my more interesting jobs was working at Midway Games, where I was a CIO. Midway Games is best known for Mortal Kombat, so I have gaming experience. So at Omnitrium, we help banks do 3 things: drive new accounts, increase stable core deposits, and build robust client relationships. We know that banks struggle to get new customers, and that's a problem for them. The top 3 banks get more new accounts than the next 17 banks combined. And online banks like Ally are growing their core deposits at 3 times the rate of your brick and mortar bank. And also, millennials, 73% of them would prefer to bank with PayPal, Amazon, Google, or Apple. But banks' customers also have a problem. People don't save. Your average person doesn't have $400 to cover an emergency. Yet they spend $70 billion a year on the lottery. That's $300 per adult. More money is spent on the lottery than milk or beer. So people play the lottery because they don't think they have an alternative, but they always lose their money. 67 million Americans are unbanked or underbanked. They're not inspired to save or use banks. So imagine a lottery where everyone wins. A customer opens an account, deposits money, and wins prizes. The bank gets new accounts, increases their deposits, and has an opportunity to engage the customer, creating a network effect. So our platform takes advantage of recent regulatory and legislative changes. In December of 2014, Congress passed the Savings Promotion Act to encourage people to save, and this allows for what's called prize-linked savings accounts. So in May, when I arrived here in Arkansas, it was legal in 21 states. Since then, it's now legal in 23, and 2 additional states. Alabama is just waiting on a governor's signature, and Texas is just waiting on a popular vote. So we believe that states will continue to pass these laws to support prize-linked savings accounts and encourage people to save. In the current market, there's over $5 billion in deposits and over 3,700 banks. And as this market grows, it means the opportunity for Omnitrium grows as well. So the regulatory requirements for this are very simple. Most of the laws just have 3 things. It's got to be a savings product at a chartered bank or credit union, and you have to have an equal opportunity or equal chance of winning. So let me give you an example so you better understand the product. So a customer will open an account at a bank, and they'll deposit $150. And for every dollar they deposit, they get a ticket. And there's a waiting period, so typically 30 days, and the ticket is active. And once the ticket's active, it's available in every drawing until they withdraw the money. And so then a bank will hold a drawing monthly, quarterly, or annually, and maybe give away $2,100 gifts a month, $10,000 gift quarterly, and a $100,000 gift annually. So our product is based on proven products around the world. PrizeLink's case studies have been done in South America, South Africa, and Europe. And really the best example here is called UK Premium Bonds. It's been run by the UK government since the 1950s. And 1/3 of the population participates. That's 22 million people. They have $62 billion in deposits. And they have, in April, they gave away $71 million in prizes. So because it's been around so long, there's been a lot of studies about it. And these studies have proven that these types of programs encourage people to save, are popular across all incomes, age levels, and household types. And most importantly, people have fun when they save. I actually have friends that live in the UK, and they're always talking about the premium bonds that they win. So how Omnitrium works. We have a cloud-based scalable platform to run everything for you. So we do program design and management, account and ticket management. We have an awards engine, and we do performance analytics to measure the success of the program. And really, the success of the program is based on marketing. And so we provide a marketing playbook to help you market the program. So there's 3 steps for us to go live. The first step is to design the program. The system is completely custom configurable for each bank. Once we have the program designed, we put together the marketing playbook. And then we connect to the customer. We either do it directly or through an API like the FIS API. We don't take any customer information. We strictly take a tokenized account number and then data so that we can analyze the success of the program. And we can do all this and be live in 60 days. So our business model is fairly simple. We make money 2 ways. We get a platform fee, and as a bank grows their accounts and deposits, we share in their success. So we plan to market to single, multi-state, and regional banks. We have been working with banking organizations like state banking groups, and we're working to integrate with the technology. Our target customer is a bank that wants to grow deposits, has a consumer focus, and has strong digital marketing and social media presence. So we feel we're unique in this product. We don't know anyone else who's actually bringing prize-linked savings accounts to banks. But there's 3 programs out there that are really good examples to talk about how people like to play games and save money. So you may be familiar with these. The first one is the Walmart Green Dot Bank Card. And what it is a debit card targeted for lower income people where they can save money and get entered into sweepstakes and win prizes. The second example is the Commonwealth.org, which is a nonprofit organization who has been working with credit unions since 2009, since it was legal in Michigan for credit unions in 2009. And so they actually do run prize-linked savings accounts. And they've been working with unbanked and underbanked. And it's proven to increase people's savings and make them understand how to use banks. And so actually in that program, they have 70,000 accounts and about $145 million in deposits. The last example is a relatively new example of gaming and saving. It's called the Long Game. Now, the Long Game is a phone app where you download it and you log in and you put your bank information in it, and it transfers your money to Blue Ridge Bank, and then you get tokens and you get to play games with an opportunity to win prizes. But this is really takes money from your bank and puts it in their bank, so it really disintermediates the market. So as I said, we're unique in that we're bringing prize-linked savings programs to banks. We hope to have 5 banks in the first year, 25 in the third, and 50 by the end of 3 years. So through this program, it's been a great opportunity. We really just started meeting with customers when I arrived here, and we've been introduced to so many banks. And so by the time I'm leaving now, we have 3 customers that we're working on proposals with. So I told you a little bit about myself. I've been working for quite a while and saved companies over $50 million, built large teams, and helped increase revenues. And I have a development team with a lot of experience. Both Bill and Manoj have been working on our technology platform, similar platforms for many years. I have a couple of advisors that are very into, I guess, price-linked savings accounts. So one in particular is Dr. Ben Iverson, and he's a professor at Kellogg School of Management, and he has published research on price-linked savings accounts and their success. And we're very excited to have him on our team. He's been working with us for a while. And the second one is a CEO of Countryside Bank in Illinois, and he's been working with us from the beginning as well. And finally, of course, the advisors from the VC FinTech program and all the FIS have been great to help us get going. So at Omnitrium, save, win, and repeat. I'm Rosemary Hackett.
To introduce Bond.ai, please welcome the President and CEO of the Little Rock Regional Chamber of Commerce, Jay Cheshire.
Good afternoon. So almost 2 years ago, on September the 15th of 2015, based upon the bold and creative leadership of Chris Klein, I had the opportunity to make a phone call to Gary Norcross, where I talked about the opportunity of taking what had been the birthplace of the financial services technology industry in Little Rock and making it the future birthplace of what was going to be the financial services technology industry coming from Little Rock. Who knew that less than 2 years later, we would be standing here celebrating our 20th team in terms of the cohorts that have been through this program and the amazing impact that they're already having. You know, almost 2 years ago, the 2 words artificial intelligence were 2 words that became part of our vocabulary that we really hadn't thought about a whole lot in the past. Where I grew up in Nashville, Arkansas, artificial intelligence was something that you got from a book. We didn't understand the cognitive aspect of thinking and decision making. Well, I'm here today to talk about and introduce a young man who's doing amazing things in this industry. In fact, Uday Ajarov comes from a banking family. His mother has been in the industry for over 32 years. In his youth, he experienced firsthand what it was like to have banks transform lives. He furthered that education through attaining his degree in engineering and then a master's in interaction design from some of the best universities in India. He continued by doing research projects in the field of artificial intelligence and cognitive science with Simon Fraser University in Canada. In 2013, Uday founded and successfully ran an artificial intelligence and brain-computer interface research company. From that, in 2016, he founded Bond AI in New York City. Today, he's going to present what many bankers have already stated is the most transformative technology that they've ever seen. Ladies and gentlemen, Uday Agaraju.
Hello, let me set this up. So, okay. Okay, that's ready to go. Good afternoon, everyone. Good afternoon. I am Uday Akaraju. I am the CEO and co-founder of a company called Bond.ai. As you can see, Bond is an omni-channel conversational intelligence platform for banks. This is a platform that will transform banks from a 1960 model to the banks of the future. So before I get started how it works, let me ask you a couple of questions. How many of you know the exact population of the United States? Just take a guess. Somebody was close. It's 321 million. Okay. So let me ask a tougher question. Do you know how many of those actually struggle and are stressed about managing their finances? Always. Yeah, just guess a percentage. No. So it's 72%. It's a huge number. I mean, this is a technology generation, right? We have a lot of tools, but something is not working, and this is a problem. If you dig into details, I mean, it gets even bad. 57% do not have the right credit cards. 77% do not have the right mortgages. 69% live paycheck to paycheck with absolutely no savings. This is bad. So something is not working. So people are in trouble, and when people are in trouble, they need help. And when they need help, what do? They go to their banks. 50% of them actually expect help and advice from their primary financial institution. And 90% of them actually expect personal finance management from their banks. I had a life-changing moment myself. I was in that 72%, unfortunately. So I had a big student loan sitting on my head, a mortgage, a car loan. My credit was not good. This was 3 years ago. So the situation was bad. So what did I do? I went to my bank too, right? So my bank didn't have the necessary tools to actually help me out of that situation. So what do? I just have two options. I just had really two options left with me. One, just hope. Just sit in hope, hoping that my finances will magically fall back on track. That doesn't happen, I'll tell you that. And most of us actually think, and actually that is the reason why all of us struggle. The second option I had was build something for myself. So luckily I had that skill, I had that patience first, so to build something. So I started designing a program for myself. I started using 17 different apps, trying to consolidate everything together, and it took me 18 months to successfully come out of that hole. So that's what I did. So it is tough. I mean, that is the reason why there's a steep learning curve. That is the reason why people actually struggle and don't even attempt that. So when people are in trouble, they expect their banks to do it. But the problem is 9 out of 10 banks in the country do not have the necessary tools. They do not have the necessary infrastructure to help their consumers. But what banks do have is a lot of data, right? They have a lot of data. If that data is used effectively to target and serve their consumers, it'll be a fantastic thing, right? So taking that metaphor, taking data from the banks, taking the metaphor of what I did for myself, we created Bond.ai. And we created 3 great modules in that platform. The first one is a predictive engine. The predictive engine takes a lot of data, crunches it in respect to a lot of user needs, and it gives banks, it predicts for the banks what the consumer needs well in advance. It not only predicts what the consumer needs, but also gives them a solution how to address that particular problem. And the second one is an algorithmic money management module. Banks can simply deploy this module to their consumers, and it will automatically help manage their finances. It will help them optimize their finances, remove the inefficiencies in their profile, help them save, and also help them invest. So as soon as you deploy, consumers' finances are magically and automatically set. And the third module is a conversational intelligence module. How many of the consumers actually really go to their banks nowadays, right? They don't. So still, the bank wants to have a touch point with the consumers, and the consumers want to have a touch point with their banks. So this engine actually facilitates that communication between the banks and the consumers through any channel. It can be your phone, it can be Siri, it can be Alexa, it can be OnStar in your car, it can be Facebook Messenger, Slack, or even simply SMS. So it's an omni-channel conversational intelligence engine where the consumers and the banks can keep in touch with each other. So we provide the whole infrastructure as a service for banks, and this is exactly what a bank needs. Everything a bank needs on a single platform. It can power their digital strategy, it can retain customers, gain new customers, and also create new revenue streams for the banks. So rather than talking more about this, let me show you a couple of examples how it works. So I have an Alexa, it's just an Alexa Echo Tab. So this is portable, that is why we are trying to use it. So I can simply ask any of my banking questions to that, and I hope it'll answer. So I can ask, let me start with a simple example like, let's take payments. Payments is the most simple answer, right? So I can ask, Alexa, ask Bond to pay my utility bill.
Sure. Your utility bill for this month is $55. Paying it from your checking account. Confirm?
No.
Okay. Whenever you are ready to pay, let me know.
See, that's it. It's as simple as that. So let us take a little more complicated example like recommendations. So we like to take recommendations from banks, what product we need, is that product good for me or not? So I can simply ask, Alexa, ask Bond if I'm using the right credit cards.
Let me see. Looking at your spending pattern, your current credit cards do not seem to be the right fit. Shall I suggest you suitable cards for your profile?
Yes, please.
Great. The best combination of credit cards for you would be a Capital One Rewards card for your frequent travels, and a Chase Platinum card for best cashback on your daily spending. Would you like to replace your credit cards with this new combination?
Of course. Why not?
Okay, done. I will now apply for the new credit cards. When you receive them, I will help you cancel the old credit cards and also move your subscriptions.
That's it. So let's take one last complicated example, right? So when we speak to banks, they always say we want to help their consumers buy something, they have a goal, we want to help them achieve that goal. So the first and most complicated example we see is buying a house. So I can even ask Bond to help me buy a house. This is the last example we see. So Alexa, tell Bond I wish to buy a house.
Great. Where is this house located?
Little Rock.
And what is the value of this house?
$200,000.
Let me analyze. Okay, I can help you get 20% down payment in 240 days with the best mortgage offer ever. So ready to start saving for your new house?
Yes.
Awesome. In the next 240 days, I will help you save, optimize your expenses, and invest to meet your goal. Let us rock.
Yeah, that's it. So this is the future of our banking, right? Yeah. So this is a simple user experience for the consumer, but on the back, we do a tremendous amount of data analytics behind. So we crunch the user spending pattern, the transaction history, wealth management, loyalty, a lot of data. So we crunch a lot of data behind. We get the data from the banks through the FIS API gateway, and our AI and artificial intelligence analyzes that, and we push it through our front-end channels like voice, text, or customer care. And for the banks, it is a spectrum of artificial intelligence modules. They can simply choose the modules we already built, or they can even build modules on top of. So it's infinitely scalable. Banks can build on top of our data analytics platform. FIS can build on top of that. So it's huge. And the market opportunity is a $6 trillion opportunity. $6 trillion is sitting in bank accounts today without being managed properly, and only $390 billion is being managed. So there's a huge gap. So we are targeting a market of $586 million in the next 5 to 6 years. So this is the question. So why now? As everyone knows, banks have been experiencing a declining growth since 2000. It is partially because of the 2007-2008 crisis, but that is not the only one. The rise of the unregulated technology companies is a big concern. In 2015, JP Morgan CEO famously quoted, "Silicon Valley is coming, they all want to eat our lunch." banks need to stay relevant. For banks that they need to stay relevant, they have two big assets. One is they have consumers. Consumers still want to go to a bank, and they have the second big asset is data. So Bond.ai is actually using these two to help banks stay relevant and power their growth into the future. We are the only company. It's actually doing a comprehensive, a holistic approach. Whatever a bank needs, we are giving them and pushing through an omni-channel strategy. So we are the only company which is doing such a comprehensive job. And our roadmap, we've been developing the product from March and April. After we came to the program, we started building our omni-channel architecture. And today, as you saw, we have a working product, a working demo. And we are currently talking to 5 different banks, and hopefully we'll roll out a pilot in the month of August with 1 or 2 of them. How do we make money? We charge the banks an implementation fee, a platform fee, and a license fee. It depends on the size of the bank, so we have quite a flexible model. So if we have 10 banks in the next 3 years, $55 million is the revenue we're going to generate. We're currently talking to 5 banks on a serious note, and I hope we'll be closing that very soon. So to roll out our platform to these initial banks, we are trying to raise $500K as of today. So we believe we have a revolutionary product, and we also have a very talented team behind. So I'm Udaya Karaju. I have over 6 years experience in designing artificial intelligence systems. I have a background in interaction design and cognitive science. I was recently recognized as an international innovator by the New York Economic Development Corporation out of hundreds of entrepreneurs spanning 5 continents. And Madhavi is our chief of product. She was working with Cognizant. She is our champion with natural language processing and machine learning. She also manages our dev shop back in India. And Michael supports us with the bank partnerships. He was previously serving as a vice president at JP Morgan Asset Management, and is the co-founder of a very successful fintech startup called Common Bond. And Brian helps us with the investor relations, and he's the CEO of Venture Out and sits on the board of New York Innovation Collective. So that's a great team we have, and I believe we have a revolutionary product, and that is Bond.ai. I always say, managing money is a full-time job, but the problem is we all have a full-time job. So we foresee a future where Bond becomes the universal financial partner to all of you through your own banks. Thank you.
Introducing Alpha Rank, please welcome the Chief Data Officer of M&T Bank, Allison Saygraves.
Good afternoon, everyone. As Chief Data Officer, and any Chief Data Officer in any organization, we face a real challenge because it turns out that the most natural way for customers to get advice and recommendations on what they want to buy is by word of mouth. And word of mouth is generally not captured in data. And so this happens offline. And so there's not really a way that we in the data field can measure this very easily. That is, until Brian Lay connected the dots and saw things differently. He recognized that banks actually had word of mouth hiding in their systems, disguised as transaction data. So with this insight, he figured out how to identify which customers are connected and influence each other so that we can target those influencers for real growth. And if you are a banker, this is music to your ears. This is win-win because you can focus on those influencers and they can help you spread the word about your products. What more can you ask than that? This is a game changer for banks. And that's why I'm so excited to be here to talk about Brian. In addition to what I think is a transformational idea, when I started talking to Brian last year, I just thought that he completely embodied the power of the human connection that we all make when we have conversations with each other. His persistence, his curiosity, and his great execution skills In addition to his being a great connector, when we got off the phone, he immediately connected me to what he described as a supernode, a woman who is working with lots of women in the United States to actually start to underwrite women's ventures. So I thought, isn't that great? We ended a call with him doing me a favor. That's fantastic. So I just want to warn you that Brian and his business model are contagious. So brace yourselves and welcome Brian Lay, CEO of Alpha Rank.
Oh man, it's good to be here, guys. My name is Brian Lay, CEO and founder at Alpha Rank. And at Alpha Rank, we help banks and credit unions monetize their data. So when I start talking to clients, I usually frame the question by asking two questions. The first one is, do you think the data you're holding on your customers, do you think it's one of your most valuable assets? And typically I get a very emphatic yes. And then I ask, do you think you're using it as well as you could be? And it's an even more emphatic no. And I say, well, that's great, because at Alpha Rank we help banks and credit unions monetize their data. So to give you an idea of how we do this, do you guys know how sites like Twitter, LinkedIn, and Facebook have been collecting information on how people are connected to each other? Sometimes called social graph data. It kind of looks like a bunch of dots and lines. You guys have seen this before? Yeah? Which is pretty cool. So hold that in mind. And at the same time, think about, do you know how every time someone uses a debit or credit card, it generates kind of that transaction string that says person A went here at this time, spent this much money? You guys know it? Okay, good crowd. So the big idea here today is that while that transaction information is very simple, if you get enough of it together, I'm talking like tens to hundreds of millions of records, and you look at it not from the perspective of what can we learn about these people as individuals, but instead from the perspective of how are all of these individuals influencing each other's spending, it turns out you can actually duplicate Facebook's underlying data asset, the social graph. And the social graph you get when you build it this way is a lot more actionable and a lot more valuable, primarily because it's built from payment data. So there's a lot of things that you can use social graphs for. One of my favorite stories comes from the world of pharmaceutical marketing. And I have a dirty secret. If any of you know anybody who's ever been prescribed a drug to lower cholesterol, like Zocor or Lipitor, the odds are they're actually taking that specific brand of medication because of a social graph drug companies built over a decade ago showing how all the doctors in the United States were connected and influencing each other. Now, what they figured out, which is pretty clever, is that they didn't need to spread or sprinkle their marketing dollars out over 100% of the population of doctors. They could focus it on 1 to 2% of the most connected to get 60 to 80% of the rest to follow, right? Kind of like a map. Understanding how people are connected allows you to figure out where the best place to start spreading something is. Or when I talk to clients, this is how I explain it. Your customer base isn't a list. It's not a list of names. It's more like a network, a graph, a connected superorganism. And in it, there's a river of information or influence or word of mouth that flows. Now, if you don't know which way that river is flowing, from a marketing perspective, you might be swimming upstream and not even realizing it. So what we're really doing by helping banks and credit unions identify that 1 to 2% is we're figuring out where the top of that stream is. And it's not that you only have to market to these people, but it is that you always want to market to them first. So most financial institutions are not selling cholesterol medication to their customers, but you are trying to spread new technology, new services, and ideally as fast as you can. So things like a mobile app or remote capture. But this is coming at the time, at least from the mobile app perspective, where while banks are spending hundreds of millions of dollars to build out these digital channels, this digital transformation, it's coming at a time where app fatigue has never been higher. It's never been harder to get someone to install and start using one of these apps. Now, compounding that issue is what I call my 55-year-old aunt problem. Meaning, my 55-year-old aunt, she's not currently using mobile banking, she's not planning on using mobile banking, and you could hit her with $1,000 of perfectly designed targeted Facebook ads. It's not going to work. That's not how she downloads apps. It's not how she downloaded that weird emoji app. It's not how she downloaded that sketchy Uber app. And it's certainly not going to be how she downloads your banking app as well. She downloads apps when someone tells her face-to-face, hey, you should probably download this app. Now, that creates a big problem because you can't go door-to-door getting people to download apps. It's not cost-effective. Can't do it that way. But going back to the river of information, maybe there's something else you can do. So it might be too costly to call up 200,000 people and say, hey, do you know we have this great mobile app? And they go, no. And you go, well, do you want me to text you a link right now so you can download it while we're on the phone? They go, that would be very convenient, thank you. Do you want me to stay on the phone in case you have any questions? That would be highly effective, but maybe too costly to do for 200,000 people. But you can do it for 2,000 people. Again, the top of that stream. So how you measure success is, we all know when we release a product or service, you kind of get this fun pop in your adoption curve. It ramps up rather quickly, and then you enter what I call this creep of death, right, where it really levels off. So at AlphaRank, we love the creep of death. It's a great testing environment. What we show is that we can come in on the creep of death and change the slope of that adoption curve. And ultimately, the delta between those two lines is the ROI of AlphaRank. This easy-to-measure methodology is one of the reasons why AlphaRank is spreading so fast. So the market opportunity here is quite large. Banks are spending $16.8 billion every year for the next 5 years building out these new digital channels and technologies. We believe the opportunity for AlphaRank is to grab around $192 million of that to speed up and make that adoption more efficient. And at the same time, we have a plan that in 3 years we can grab about $20 million in net revenue. So why now? A couple forces driving how fast we're spreading. The first one is tech. The data is now available either in data lakes or providers like FIS. The second one is awareness. Most of the people in this room had kind of seen what the social graph thing was. That's unprecedented. Sites like Facebook and books like Malcolm Gladwell's Tipping Point have mainstreamed this idea. And that's really a contributing factor to how fast AlphaRank is spreading. At the same time, cost. So how we actually turn that transactional data into social graph data, incredibly computationally intensive and pretty expensive. Until a few years ago, we just couldn't do this at scale. So from a competitive perspective, we sit between two worlds. So you have the transactional analysis world and then the social data analysis world. So social side, you have sites like Facebook, Clout, Sprinkler, Radian6. On the transactional data analysis, it ranges everything from Excel to Tabula. Now, by building the social graph data from transactional data, you get the best of both worlds. So one of the best things is that we can use totally encrypted non-PII data. It's just time series analysis. At the same time, because we're taking purchase data to figure out influence, we get directional purchase influence. So who influences whom? And finally, from a noise perspective, it's a lot easier because you're just looking at payment data. Pictures of cats and Kardashians play no role in how we determine influence, which is my favorite part. So from a product perspective, there's 3 phases of how we're rolling out AlphaRank to market. Phase 1 is the dot phase. The dot phase is what I just described to you. It's basically targeting the 1% to 2% of the most connected customers and then using them to speed up adoption. It's sort of like if you think you have a customer base and you want to spread something faster, target that 1% to 2% and use them to accelerate that adoption. So this works for things like mobile apps, remote capture, wealth services, credit cards. You guys get the idea. You're basically cross-selling to your existing customer base. The advantage of phase 1 is that it's incredibly easy to implement, right? Totally encrypted data, a single data dump. And then if you can use Excel, you can interpret the results we give you. It's just a shorter list. Now, where we're going is stage 2. So stage 2 we call the link phase or stage. Now, the link phase is actually infusing all of the graph data we collect into your existing analytics. And the goal of AlphaRank is to become an OEM component in everyone else's analytical stack. If you're doing analytics on consumers, most of the time, by understanding how those consumers are connected to each other, it makes your analytics better. And so we want to be in everything. Some examples of this would be attrition, next best product, fraud, and credit scoring. Our revenue model is simple. We charge $1.70 per customer per year. We start off with pilots, and we try to move to 3 to 5 year contracts. We sell 2 ways, both direct and through channel partners. And today, I'm very excited to announce some significant traction. So, AlphaRank launched publicly 12 weeks ago at Finovate. We were quickly voted best new technology by over 1,000 bankers. At the end of that conference, we had 60 banks come up to us and express interest in using this technology. I'm very happy to announce that in the last 12 weeks, we have now signed 7 clients. That's hard to do. Thank you. Including amazing banks like Allison's M&T. At the same time, in the last 12 weeks, we have signed 2 distribution agreements with OnApproach and KPMG. As collectively, as a team, we have decades of experience in pulling value out of transactional data. We've worked at Visa. We've sold companies to MasterCard and FIS. And we're backed by an incredible team of advisors as well, including the CMO of Oracle's Marketing Cloud, the ex-CTO of Capco, and a guy that sold his last payment company for $1.2 billion. I should mention as well on the team side, we have history of growing startups to over $10 million in revenue. The bottom line here is that we know what we're doing, and we've done it before. Financially, there's clearly a revenue opportunity here. In 3 years, we aim to collect over $20 million. We're raising $2.5 million today to grow the team and meet the demand we're seeing from the market. If you're curious about what our go-to-market strategy is, or you just kind of want to know how do we turn transactional data into social graph data, I would invite you to connect with me on LinkedIn. There's a video on my profile that we did with JP Chase that answers a lot of those questions in detail. My name is Brian Lay. I believe everybody is connected to everybody else, and I can prove it. Thank you.
The Venture Center is proud to welcome our partner, the Chief Executive Officer of FIS, Mr. Gary Norcross.
Good afternoon. How are you guys doing? How awesome were those first 5? Wow. You know, so on behalf of FIS, I also want to mention we've got a lot of our executives here with us today. Marianne Brown, Co-Chief Operating Officer of all of our institutional and wholesale. Anthony Jabour's around here somewhere, Chief Operating Officer of all of our banking payments. Rob Lee, Chief Product Officer. And all the other people here at FIS. It's just a thrill for all you guys to come. You know, a lot of people have asked me why the Venture Center, why the Accelerator, why in Little Rock? And if you think about our company, and this year we'll do almost $9.5 billion in revenue, really the only way we can grow is to be able to innovate for our very clients. And many of our clients are sitting in this room today. And so it's important as we think about innovation, not only to be a leader in investing in our existing products and services, but how do you team with some of the greatest thought leaders right in the industry? Because all innovation starts at one point, and that is with an idea. And it's how that idea then turns into a product that then drives value for our clients, that allows them to compete and be successful, is what really FIS is all about. And so we're proud to be a partner with Lee in the Venture Center. And who we're very proud to be a partner with is the state of Arkansas. You know, it means a lot for us. We started as a company here in 1968. And it means a lot for us to come home and be a part of all the wonderful things that are going on in this state. I've had the opportunity to meet the governor many times, and we've talked about all the initiatives that he has going on, bringing computer science back to high schools, STEM investment. And this partnership is just another great example of where we're bringing technology and jobs back to the state. So with that, it's my pleasure to introduce the governor of Arkansas.
Thank you, Gary. What a great partner FIS is, and Gary Norcross, to be able to host this accelerator right here in Little Rock, Arkansas, and have the commitment of FIS, the Venture Center, and the state to participate in this together. And I'm here to welcome you and to thank each of you for being here and being exposed to the great state of Arkansas over the last few weeks. I've got to know some of those that are being here with their companies, and they're incredible people, incredible talent for all over the globe. We actually went skeet shooting together, and I learned that all of these people that haven't shot a whole lot of guns before come here and they do pretty well. But they better stick to venture capital and technology, but they do an incredible job. I was here last year, and so we thought it was so successful, we wanted to make sure we invested for the future. Last year, when we talked, I announced that we had a 3.8% unemployment rate in Arkansas. Guess what? 1 year later, we're at 3.4%, the lowest in recorded history of Arkansas. And so you've made your pitches. I get to make a little pitch in behalf of the state of Arkansas. And that is that we've got a growing economy. We have a diversified economy in which agriculture is so important. It's #1 industry. Tourism is our second leading industry in this state. We have a history in manufacturing, one of the 6 leading states in terms of workforce that's experienced in manufacturing. We're bringing manufacturing back to Arkansas. but we also have some incredible retail giants, as you know. The entrepreneurial spirit in Arkansas runs deep, whether it is in agriculture, whether it is in retailing, whether it's in manufacturing, or whether it's in data analytics. And we want to expand that diversity of our economy into technology. And that's one of the reasons this is so important to us. But for you to come here, you've got to understand the dynamics of this state. We have a low unemployment rate. We've got great entrepreneurs here. We're leading the nation in a number of categories, one of them being in foreign direct investment. In terms of job creation, we're leading the nation. We're number one over the last 5 years. We've grown in job creation by foreign direct investment by 46%. That's a great story because I'm taking the story of Arkansas to China, to Europe, to Israel this year. By the way, great technology country. And so a lot of opportunities there in foreign investment. We're growing internally with our major retailers as well. But in terms of technology, what does it take for a technology company to be located somewhere? One, you need to have a quality life that millennials like. We are developing in this state. We're investing in the biking trails, our outdoor sports, our downtown living. All of this attracts and is a great quality of life. Secondly, it's very important that we have access to capital. And it's exciting to me as we develop that access to capital in this state and that comfort level with those that are in the technology arena. And then you have to have a talent pool. And Mike Preston is here, who's my Director of Economic Development. He and I went out to Silicon Valley. We wanted to tell Silicon Valley the great stuff that we were doing in Arkansas. It didn't take us long that we realized there's only one thing they wanted from us, and that is our talent. And so we left there and said, we're going to have to develop our own technology companies here. We're doing that. But the reason we have talent here is that we're the first state to mandate computer coding to be offered in every high school in Arkansas. We are... Wired magazine noted that Arkansas is leading the nation in computer science education. I just got off the phone with the White House about an initiative we hope that they come out with in terms of computer science, but we're leading the way in Arkansas. We want to continue to do that because you need talent, and we want to create that talent. We want to develop it and partner with you. Incredible entrepreneurial spirit in Arkansas. We want you to take advantage of. And so if we can be helpful, Mike Preston's here to sign a contract with you. We want you to do business here. Some of you, many of you are going to go back to your home area. And we want you to be a success in your new technology business. We want you to expand, and when you expand, come back to Arkansas. So it all centers here. Gary, thank you. It's been a great partnership. We look forward to the success of each one of these companies, following you in the future. Do business in this state. Welcome, and thank you very much.
We applied to this program because it's a great opportunity to validate our product, meet with potential customers, and interact with FIS.
I'd never heard anything about Little Rock, so everything surprised me. And it was a pleasant surprise. So
it was an easy choice. We get to work with a world-class company in FIS and a great team of focused fintech entrepreneurs and mentors here in Little Rock.
We've been to a lot of accelerators and developed a lot of businesses in some of those places like New York and San Francisco. Companies, our customers, send people out to the West Coast or to New York to interact with us. They're not the people who are the actual decision makers. And we know from the people we're talking to that we're actually talking directly to the actual client.
I mean, we've been fortunate to be involved with a few accelerators in the last couple of years. And you know, I think the Venture Center does a fabulous job bringing banks into the office for us to present to them directly, both short pitches and long presentations. But in addition to the kind of professional side, there's also the social side, and having the opportunity to go out with all the entrepreneurs and go for dinner, go for drinks, go to happy hours. A lot of work gets done after hours, and it's just a great personal experience and kind of bonding experience among the entrepreneurs.
I think what surprises me is how innovative the area is, and I think how invested people are in the program. It's not lip service like it is with some of the other programs. I mean, I mentioned the governor's involvement in it. Day one, you had the mayor. We had a one-on-one meeting with Gary Norcross. Being able to meet with the CEO and CFO of Walmart. I mean, these are opportunities that you wouldn't get anywhere else, and I think that was really impressive.
The cohort is really a variety of people from experiences and backgrounds, and so it makes it very interesting and enjoyable.
What's really unique about this program is being able to build to market demand and discover product market fit before you have MVPs invaluable.
It's 12 weeks of immersion with banks, credit unions, financial institutions that'll take years to get access to.
This program has already helped us tremendously in terms of traction. I mean, we've met with more banks in the last 3 months than we've met with in the last year.
I'm new to banking, and so that's one of the most valuable things about the program. I've learned a lot about banks and how every bank acts differently, and I think that's been very valuable, and it helps to set my expectations when dealing with the different customers.
These 3 months actually gave me a lot of insight about banks, the compliance, the regulation, especially how to talk with banks. I never knew the sales cycles were so huge. So I have a realistic picture now, and I have a real strategy how to go about it.
So the greatest part of pretty much any accelerator, but in particular this one, is the opportunity to work with the other entrepreneurs that are extremely talented, and in this case in the same sector and with the same type of focus. There's a lot of shared knowledge and opportunities, and even the opportunity to integrate and work with each other, which you just rarely find on the street.
I think it's second to none, really.
Since we have the partnership with FIS and we have access to their mentorship, access to their infrastructure, it gives us a hyper lead between our competition and where we are right now.
When I leave Little Rock, I'll miss working with the team every day, both the VC people, as the Venture Center people, as well as the cohorts.
To an early stage fintech company looking to come to Little Rock next summer, I would say look it up on a map and then absolutely go down and do it. It's a fantastic opportunity.
If you have the opportunity to be in this program and you're a fintech company that is bank enabling, there is no better accelerator program on the planet.
Very good.
Introducing WalletFi. Please welcome back to the stage the Managing Director of the VC FinTech Accelerator, Wayne Miller.
Thank you. So there should be kind of a little question at this point in the program that the center of the world for FinTech is right here in Little Rock. And but thank you, Governor Hutchinson and Gary and all of you for making this so extraordinary. I have had the opportunity, unlike most of you, to work with these people for 12 weeks, and the team that I'm going to introduce next. Mark, where are you? Please stand up. And Alon, stand over here with him just for a minute. I've gotten to work with them for 12 weeks, and the opportunities, as you can tell from the videos right there, for these guys have been extraordinary. And, I have to say that these two have exploited every single moment and every single opportunity during this program. Whether it was working with the cohort, they were always the last to leave the room when our banking partners were here, or the executives from FIS, in building the relationships and doing the things, as Mark said in the video and Alon said in the video too, about having the ability to compress time and truly accelerate their chance to go to market. I'm proud of them, I'm grateful for them, and they've been very representative, and I really applaud them for what they've done. Thank you, guys. Come on up here. So, in this world of FinTech, we've talked a lot about there's plenty of ideas, but it is about the ability to execute, and these guys are winners. I welcome Alon to the stage and WalletFi,
And pay attention. They've got a solution that touches every one of us in this room. Thank you.
Hi, everyone. I'm Alon Glansman, the co-founder and CEO of WalletFi. And I'd like to start off today with a problem that many of us are likely familiar with. And that's having absolutely no idea what's tied to our debit and credit cards on a monthly, recurring, and subscription basis. I see a couple head nods already. So if this sounds like you, you're not alone. As it turns out, 40 million millennials have 10 to 15 recurring charges tied to multiple debit and credit cards. And as you can imagine, this creates not only a problem for the consumers, but for the banks and credit unions as well. So on the consumer side, losing or replacing a card is an extremely painful process. And when you do get that new card, there's no easy way to update your payment information. And then there's the duplicate subscription charges, right? So maybe you have Netflix on 2 cards. I'm guilty of that. Or maybe somebody in your family or a couple people in your family have 3 Spotify accounts. We've all been there. On the banks and credit union side, millennials are more loyal to their subscriptions than they are to their banks. And what do I mean by that? Well, we recently had a person with 2 Wells Fargo cards loaded in our app, and yet they were not a Wells Fargo customer in their mind. But if you asked them if they were a Netflix customer, they said, yeah, I'm a Netflix customer. Are you a LinkedIn customer? Yeah, I'm a LinkedIn customer. So there's a disconnect here. And then there's customer churn around reissuance. In that 2 to 3 day period where it takes for that new card to come in the mail, those recurring merchants are already reaching out to your customer and asking for updated payment information. And oftentimes it's not your card that you've reissued. And it could be a different card from a different bank. And that puts top of wallet at risk. Fortunately, there's now a better way. And that better way is WalletFi. So what we've done is we've created bank technology that allows consumers to easily identify all of their subscriptions, recurring charges, and card on file, and allows the consumer to move those over in real time from their old card to their newly reissued card, providing them more financial control and the ability to optimize their spend. On the banks and credit union side, this helps to increase millennial engagement by helping the millennials where they spend around their subscriptions, reduces customer churn, and secures top-of-wallet status. By doing this, we are addressing a $4 billion global revenue opportunity. We're starting with the community banks and the credit unions and working our way up to some of those bigger banks and financial institutions, which have a longer sales cycle. One of the things to note is that the big banks could be worth anywhere from $7 to $10 million a year in revenue for WalletFi for one single bank. So why now? Well, over the next hour, you're going to hear a lot more about millennials. And it's because millennials are now the predominant consumers of financial services in the US. And that's actually a quote from Gary Norcross, so he teed that up perfectly for us. Subscription economy. We live in a subscription economy, and it's grown by 3,000% since 2013. It's also now valued at $102 billion. And if you don't believe the size of this, think about Amazon's recent purchase of Whole Foods. You're going to be able to buy your groceries on an on-demand subscription basis. And then there's the reissuance piece. 200 million cards are issued every year in the US, and when that Target breach happened, 40 million cards were reissued. 10 to 15% of those were never reactivated by the consumer. Those are some large numbers, and that wasn't even the bank's fault. So from a competition standpoint, we view this from a B2C and B2B side. On the B2C side, there are some interesting companies like Trim and Truebill that help you identify your subscriptions and cancel them, but nobody helps you manage the subscriptions that you want to keep. Additionally, nobody on the B2C side has figured out the transfer component like we have. And then on the B2B side, there are Visa, MasterCard, they all have account updater services. But this is focused on getting the merchant back online and not your bank customer. And if you're a consumer who's just gone through a painful reissuance process, especially around fraud, you don't want to find out that that brand new number is being transacted behind the scenes. So what we've done with WalletFi is provided technology that allows you, gets the bank customer to proactively take all of their charges and move it over. So here's how it works. For starters, the setup for WalletFi is a quick 3-step process. Using bank information, the user can sign online and see all of their subscriptions and charges quickly in one place, and then begin to move subscriptions over by clicking on the icon. So in this case, clicking on Netflix and dragging and dropping it to another card in the digital wallet. On the business side, we make money by selling to banks and credit unions through a white label and direct integration solution. So we have a white label app, and then we also have a call center enhancement feature, and this is to increase customer experience. It's another touch point, so when the customer calls, you can push out the WalletFi app and get them back online quickly. And for the banks that don't want another mobile app to market, we have a WalletFi API that directly integrates. The revenue structure is pretty straightforward. It's a mix of implementation fees and a monthly charge per customer. Since founding the company in 2016, we've made some great traction. In September of 2016, we won the SoFi MBA pitch competition. If you're not familiar with SoFi, they have 200,000 millennial customers. And this was fantastic validation for us. In October, we were one of the only non-VC backed companies to be invited to participate in Bank of America's Tech Innovation Program. And in January, we began beta testing. In March, we went down to South by Southwest. And then in April, we were very fortunate to be accepted into not one, but 2 global FinTech Accelerator programs, the VC FinTech Accelerator and the Barclays Techstars Accelerator. And ultimately, it was a relationship with the Venture Center, as well as FIS, that got us down to Little Rock, and being here today makes it absolutely worth it for us. We just finished completion of our iOS mobile application. It's been a long time coming, so we're very excited to announce that. And then we have 30 banks and financial institutions that we're working on deals with to get to a point where we manage all subscriptions globally. We realize this is a lofty goal, which is why we're raising $750,000 to support key hires, marketing, bank partnerships, which will get us to $35 million in ARR by year 4. Behind WalletFi is a team of experienced entrepreneurs who have been there before and know what it takes to scale a company. I've had 2 companies in the past. My co-founder, Mark, scaled a staffing services firm to $17 million in revenue without any outside capital. We have a fantastic development team with Patrick and Catherine. Catherine was the head of Amex payments for a while, and then Rory was listed as one of the best new app designers by Apple. We also wouldn't be here without the support of our fantastic advisors. So Scott Albert is one of our advisors. He came down here from North Carolina, so Scott, thank you for making the trip. Jordan Duggan, who's helped us with the compliance and the DevOps side, and then Randy Baer, who has 22 years as an IT architect at USAA, and we actually met him down here as part of the program. So that's our team, that's WalletFi, and we look forward to helping you become top of wallet. Thank you very much.
To introduce Plinkett by HT Mobile, please welcome the Senior Vice President and Group Executive of Global Product and Services Division of FIS, Chris Klein.
Thank you, guys. First of all, I've been associated with the Venture Center, the Accelerator, the last 2 years, and I just want to say how incredibly grateful I am to have participated in this program. The amount of energy, the enthusiasm, walk into the Venture Center, into the technology park, meet with these folks, and really see true passion, energy, and vision, and then see all the FIS people come in and support it in the local community. It truly is a career of my highlight, and I'm so honored to be a part of this program. Now with that, if you were to interview last year's cohorts and this year's cohorts, last year's cohorts would have said, we couldn't get rid of Klein. He was down here all the time. These guys are like, man, we'd really like Chris to come down here a little bit often. So I went through like an IT professional. I went through some root cause analysis, and I came to the conclusion last night when I was at Clinton Airport, finishing my 90th segment of the year so far, that might be the reason why I wasn't able to spend as much time with these guys. And I see Anthony right up here sitting there laughing. He's like, Klein, if this is your way to get access to the corporate jet, it ain't happening. But at the end of the day, 95% of those 90 segments were to go visit customers. 5% was for our leadership and sales conference, but 95% to meet with Hancock Whitney Bank, Bank of the West, for the sole purposes of having a digital strategy conversation. What are banks doing on the digital front that address their needs? And so digital means a lot of things to a lot of different people. A lot of people sit there and say, well, digital is a mobile app. It's the Internet of Things. It's wearables. Well, yeah, that's pretty important. But at the end of the day, banks are interested in an effective digital strategy because they just want to do two very simple things. They want to attract customers and they want to retain customers. And the best way to go about doing that is to provide an excellent customer experience that's consistent across every channel. And oh, by the way, yesterday I was with the chief distribution officer of a large bank out in the East Coast, and he added into this, know your market segment and differentiate yourself from a digital perspective in that market segment. And so this is easier said than done, and it sounds simple. Easier than said and done. There's a lot of headwinds in the industry, and banks are competing with non-traditional providers. I've got some facts here, and I have to read from because I don't want to get fact-checked and be proven wrong if I misquote it. 1 in 4 Americans have $0 in savings. I can absolutely relate to this because I'm about ready to send my oldest off to college in a few weeks. 40% of adults would give themselves a failing grade on their financial knowledge. Not good. 71% of millennials would rather go to the dentist than listen to what their banks are saying. In other news, 71% of millennials have not had a root canal. 53% of millennials don't think their bank offers anything different from other banks, and community banks, the average age of community banks customers is 50 years old, in their mid-50s. Well, I'm about ready to introduce you to somebody that's figured this all out. Somebody that knows how to go help banks attract and retain that next generation of customer. Somebody that I would be more than glad to take with me on the next 90 flight segments the rest of the year, if you have time, and talk with my customers about an effective digital strategy. With that being said, I'd like to introduce you to the CEO and founder of Plinkett, Kathleen Craig.
Ooh, that was a lot of pressure. I know everything, huh? So good afternoon. I'm Kathleen Craig. I'm the founder and CEO of HT Mobile Apps. And today I'm here to talk to you about our new product, Plinkett. Thank you, Chris, for that amazing introduction and for being a part of the accelerator. I know every company has really enjoyed getting to know you, and we're thankful for the time you've invested. So a little fact about me is I'm a former banker. So I worked for a community-based bank for a number of years, and I work with banks across the country. And so I can tell you firsthand that community-based banks, and I see some of our friends from Bear State and others in the room, do an amazing job with customer experience for those folks that walk in our branch, right? The folks that walk in our branch, we know your mama, we know your sister, we know if you're wanting to get a mortgage, we know if you have a small business, right? We know you. The issue is this is an ever-decreasing percent of our population. More and more folks now are digital, right? And they're not interacting and coming in the branch. So we've realized that, again, that community-based banks need a solution for this. As Chris mentioned, their average customer is now in their mid-50s, and they are not able to connect with this generation. So with Plinkett, we're helping community-based banks build lasting and profitable relationships with millennials. When we decided to take on this really big problem, we didn't want to just build a product and then find a problem. We wanted to make sure it was research-based. So we actually got a grant from the state of Michigan, where I'm from. I know I've picked up a little accent, but I'm actually from the north while I've been here. And we actually got a grant from the state of Michigan, and we spent the better part of 18 months talking to community-based bank executives, marketing directors, board of directors, and also talking to millennials and figuring out what the issue is. At the highest level, here are some of the things we found in addition to some of the things Chris mentioned. So 30% of income is spent on debt repayment. And as Chris mentioned, 1 in 4 Americans have $0 in savings. And I think, as Rosemary mentioned earlier, 50% of the population cannot come up with $500 in savings. This means 1 out of every 2 Americans, U.S. adults, are one financial incident away from crisis. The other issue with this is $500 is your ticket to so many products and solutions that banks and other financial institutions offer. The other thing we learned as we interviewed these young folks is that 82% of millennials are open to switching financial institutions right now. So as a bank marketer, this is terrifying. 95% of millennials we interviewed do not know the steps to managing their money. But interestingly enough, 100% want to know. When we asked them, do you know the steps to managing your money, they all sat up to the table and said, no, but are you going to teach me? I said, not today. Today's just an interview, but we're going to come back and do that. So we feel this is a real, financial education is a real opportunity for these community-based banks. The other question we asked these young folks is, if you had a question about money, who would you go to? Mom, Dad, Google, and friends. Not a single one answered my bank. And this was across the board, whether they were with a credit union, a big bank, or a community-based bank. They weren't coming to us. This was a knife to the heart as a bank marketer, because I literally at that time was spending millions of dollars a year of my bank's budget to change this perception and to let these young folks know that we're there to answer money questions. So obviously there's a large gap, right? There's a large gap between what we think we are and what we think we're communicating as a community-based bank and what these young folks are thinking of us. So we built Plinkett to bridge the gap. As we built Plinkett, we realized we needed to do a couple things different. First, white labeling. Traditionally, for community-based banks, we white label apps. The problem is you're spending small budgets across an app and trying to get traction in an already very cluttered space. So we wanted to make sure with Plinkett that we were leveraging and combining the power of these budgets. The other thing we quickly learned is we had a hypothesis that we'd start with our financial education journey with a budget. Well, here's the deal with budgeting. Budgeters are budgeters, and non-budgeters are non-budgeters. And it is really hard as the first step of financial wellness to change that behavior. It's like weight loss. All of us know to eat healthy, we know to exercise every day, but it's hard stuff, right? And there's a lot of guilt and whatnot that comes with it. So we knew for these young folks that it needed to be automated and easy and simple to start. So we've decided to start with automated goal-based savings. So for those folks in the room that ever had a Christmas Club account or a holiday savings account, we've done that but digitized it and brought it into the new generation. So with Plinkett, banks sponsor Plinkett in a geographic region. We already have several banks signed up, and we're really excited that we're launching. Users then sign up for a Plinkett account at that sponsoring financial institution in less than 60 seconds, and they can get started. They then use Plinkett, engage with Plinkett, and we can use this digital front door to expand their relationship with this community-based bank. To dive a little deeper, how they set up their account is, again, they go to Plinkett, they attach their primary checking account, they set their savings goal. They can save as little as $1 a day, so none of those minimums that traditional savings accounts come with. And then the money is automatically transferred from their primary checking account to their Plinkett account at the cadence they set, and those deposits are held local. As they use Plinkett, we then have the opportunity to engage with them and share financial education and share relevant information about their financial journey and their future. They can then use this money they've saved for their goal to start an auto loan, go take that vacation they saved for, or save for their house. So with Plinkett, a Plinkett account, actually we're able to operate a Plinkett account at or below the cost of a traditional savings account for a bank. So what's really exciting for us about that is we can pass that savings on to the person who needs it most, which is the end user and the saver. So we can reward them for saving and when they reach their goal and other behaviors we want them to do. We can also reward them for financial education and for engaging with the application and offer them relevant advice. We knew also it had to be elegant and fast and simple, so we've tested every wireframe multiple times, and we even tested things like panda or no panda, and it turns out even 34-year-old men love a panda. For banks, it's great because it brings much needed deposits, it brings relationships, and then we provide them relevant data and analytics. This is our roadmap and what it looks like. The goal-based savings is built today. We're transferring money at our first bank. Where we're going next is we're building a Plinkett bot, so where our end users can actually engage with us and ask questions. So for example, they can text, Plinkett, how much did I spend on Starbucks last month? And it can say, too much, cut it out. No, it can say you spent $100. Would you like to set a goal to reduce that? And you can actually engage with the app and reduce that amount. From there, we're going to an advisory model. So where the app can really treat our customers the way we treat those in-person, in-branch customers based on what we know about them. So if you can imagine, hey, Kathleen, how's the small business going? Did you know because you're a Costco member, you can save on business checks? That's the same way we would engage in person. We're just not doing that digitally right now. With Plinkett, we're going to be able to. For community banks, it gives branding touch points and again, this digital front door to the end user, as well as relevant dashboards. As a community bank marketer, I know a lot of folks today have talked about data. I had access to all kinds of data. I just didn't always know what data to have or how to use it. So with our platform, we talk to the bank about their strategic goals, and we build them dashboards based on those goals and objectives. Our market size is large. There's 10,000 banks in this country, 5,800 under $50 billion in assets, so in that community-based bank size that I talked about, and our goal is to launch at 500 of those over the next 5 years. At 500 banks, with an average of 10,000 Plinkett accounts per bank, at $1.25 per month, we're an over $70 million a year in annual revenue company. Why are we doing this now? Again, community-based banks are looking for deposits, right? They're struggling to compete with really well-funded fintech companies, the big banks, and then the regulatory burdens that have been put on them. We also feel strongly that millennials shop local and eat local, and if they knew the power of banking local, they'd make different decisions. We've done this before as a team. We currently have a product to market called Banker Junior that we've bootstrapped to $500,000 in cumulative contract revenue over 14 states. We work with banks from $30 million in assets to $16 billion, and it's gone really well. We've learned really great lessons and things to do, and of course what not to do as well through that journey. We have a team of experts in Michigan, Atlanta, and Boston that have had successful exits, startup experience, banking experience, marketing, and development. Right now, we're currently raising $500,000 round. We have half of it in to launch at our first 5 banks, grow to 50,000 accounts, and $750 in annual recurring revenue. We are really proud of the traction we've had to date and thankful to the Venture Center and to FIS and all of the folks that have brought through the banks. We've gone from 3 active discussions, in the approval process to 8 banks in our approval process. We've gone from 12 qualified leads to 21 qualified leads that we're working with. And again, we're launching at our first bank up in Michigan right now. Thank you so much. I really look forward to meeting you afterwards, and thank you all for being here.
Introducing Hedgehog, please welcome Financial Services Executive Robert Armiak.
Thank you. My name is Robert Armiak, and I'm here to introduce Hedgehog. My background is I'm a founder of a number of fintech startups, most notably what's known today as Alliance Data Systems. I helped start Alliance Data Systems in 1996, long before big data was the buzzword of the day. Today, ADS is one of the largest big data companies in North America. Going public in 2001, the IPO turned out to be one of the most successful IPOs of all time, with the current market cap of over $14 billion today. 12 years later, as the company grew to over $5 billion in sales, I stepped away, bored with the sheer size of the company and what it had become. I wanted to start over, build something new, do it again, find the next big data play, and hopefully the next huge IPO. So in 2016, I co-founded a fintech startup called BrandCrowder. BrandCrowder is an alternative investment platform matching investors with free cash flows of America's best brands. What I quickly learned in forming Brand Crowder in companies like it, that we absolutely needed some sort of investor risk engine to help investors who are investing in things like alternative assets. So today, I'd like to introduce you to Hedgehog and its founder, Francois Nabongo. Hedgehog will improve risk-adjusted returns by giving investors insights and tools they need to invest. Hedgehog, as you'll learn, is an integral part of a large ecosystem play. I love startups who think big, and I see Hedgehog as a big opportunity in the huge data analytics space. Francois, come tell us about Hedgehog.
My name's Francois. We're Hedgehog. We are crowdsourced risk solutions for the retail investor. So what does that mean? It means that we stop terrible things from happening to good investors, right? On Black Monday in 1987, in one day, 22% of the value of the stock market evaporated. In 2008, 97% of supposedly de-risked mutual fund product lost money. And the mean loss was almost 40%. In 2010, on May 6th at 2:45 p.m., the stock market lost almost 10% of its value in 36 minutes. This is a big problem for the financial services industry, because we're not going to be able to sell mutual funds to the next generation of investor. There's a solution to mitigate risk. It's called a hedge. 50% of U.S. households are invested in the stock market. 9 out of 10 of them don't know they're exposed to this level of risk, and 9 out of 10 of them don't have a plan to mitigate that level of risk. So what are they going to do? The first thing they're going to do is Google it. And what they're going to learn is that the portfolio theories have flaws. By portfolio theories, I mean the models that your robo-advisor or your wealth manager are using to give you advice. But what they're also going to learn is that there's no easy solution to find out what your risk is. 13 times over the last 30 years, actual market performance has broken all the risk models. And what people are worried about are the black swans. Those events that were supposed to happen maybe once in a lifetime, but are happening with more and more frequency and less warning. So the markets behave like this on the right. They don't behave like the models on the left. And we're all the way at the top on the far right, which is the perfect opportunity for a hedge. So how do we solve this? First thing we do, we use big data to do two things: to profile investor risk and underwrite and analyze alternative assets that aren't linked to the securities and fixed income markets. We use artificial intelligence to model how markets actually work. We crowdsource human intelligence to find the answers. We put it all in a blockchain to scale and verify data quickly. So what does it look like? What we do is we give the next generation investor the tools they're used to interacting with. So it's a search bar, but it's contextual. When it says, I want to hedge the mortgage market, it knows that what you're worried about is commercial mortgage-backed securities, which caused the last crash. It then takes all the data about the investor, their portfolio, their transactions, their assets, their liabilities, puts them all in a risk engine. What comes out the other side is recommendations, but contextual recommendations that fit actual market conditions. And if you like, on the platform, it'll refer you to a wealth manager. What this means for community banks is that they'll be able to scale their wealth management and private banking advisory services. Instead of talking to 1,000 clients a day, maybe they're talking to 10,000. And what comes out the other side of the risk engine is not only all the information about the investor, but what they're actually concerned about. So it saves a bunch of time. So if this sounds familiar, this is how hedge fund analysts got out ahead of the last crash. So this is a rather large market. $9 trillion today is held by investors who are unhedged. The data, news, and analysis portion of that is about a $26 billion market. Just the data analytics segment is $12 billion and growing at 60% CAGRs a year. That's a $200 million opportunity for us at 0.1% market share. So why now? First thing, the data, the institutional level data is finally becoming available. And the technology is not only available, but getting traction through the business models, and people are adopting them. And finally, the next generation investor is going to control $50 trillion in wealth in the next 20 years. So the competition in this space, how we measure it is by asset diversification and allocations. The more and different types of assets you can invest in, the greater the opportunity to manage your risk. And then transparency. How much understanding and insight can we give the investor into the risks they're taking, the positions they're taking? There's some institutional players in this space, Charles Schwab Intelligence, Wells Fargo. Interestingly, Wells Fargo invested in a consumer-facing engine, iMatchative, it's right next to it. Some disruptors, Betterment and Wealthfront. Forward Lane is up there. They're Techstars play in this space. And Union Square Ventures. I included them because they're the shadow bank. What they did was get a couple of their portfolio companies together and start working on what they called Robo-Advisor 2.0. So we're a business to consumer. We think of us as an easy button for your risk or a Google search bar for your risk. We integrate everywhere across anyone's platform through a white label, and we convert a lot of our potential customers into clients. One important thing about this business model is we don't disintermediate. So here's our team. Ijama is a capital markets entrepreneur with a successful exit. Spencer has got expertise in marketing to the crypto markets. And Albert has been building risk engines for the global banks. My name is Francois. As Bob said, I'm a fintech entrepreneur. I built this because I needed it. Today, we're a server in a closet. If we were just to remain that, it's still a $20 million revenue opportunity by year 5, so this is how you get your money back. And we're early. We started just before we got to VC FinTech. We're launching our beta in September, and we're raising our seed round in August. Happy hedging.
To introduce Explainer, please welcome back to the stage the VC FinTech Program Manager, Brian Bauer.
Thank you. Me again. Introducing this next company is pretty easy, and it's partly because the team on this company is so qualified and the solution is very timely. In fact, they're so qualified, I would dare say that there is not another team on the planet more qualified to bring this solution to market. SR, a co-founder in this company, is a former chief data officer at Citigroup, where he built the enterprise-wide big data solution that was deployed throughout that company. And also a former general manager at Oracle, where he built the Basel Capital Adequacy Framework and the leading anti-money laundering solution that's still in use today. So let those two facts just rest on their own. And with that, I want to introduce SR, co-founder of Explainer Analytics.
Thank you, Brian.
Does he have a mic?
Is this audible? Yes, it is. Wonderful to be here, and like to kind of explain a little bit about what I do for a living. Now, my background, as you heard, is in data and analytics. That's pretty much what I've done now for a good length of time. And in my last role as the Chief Data Officer at Citigroup, I came across several what were considered intractable problems. There are several deep issues with regard to regulatory reporting, the underlying computations, the ease of use, and how you translate the increasing regulatory burden into an operable solution within the institution. These are problems that have been poorly solved in the industry. And even though I've been facing off against these issues, both as a vendor as well as inside large banks, we believe there's a great opportunity going forward, and a lot remains to be done. So that was the kind of background and the genesis of the idea that led to the formation of the company. And I teamed up with my co-founder, Alok, who comes from a risk and enterprise risk consulting background, and we intersected in a past life where he was consulting for the very same problems that I was producing product for, notably around the Basel capital adequacy process. Now, in the years since the global financial crisis, the whole stress testing regime is something that all of us have, those of us in banking have kind of experienced and, dare I say, endured. So this is, again, an enormously difficult challenge that everybody had to overcome. And in my last role, I was vested with, pushing over the goal line several strictures that were placed on the company. But that's a kind of long preamble to the class of problem that we are seeking to address, which is that are these computational problems that banks face, is there an easy way to address that challenge? Can it be made interactive? Can a user or analyst actually cope with all of this computational burden? Run the computation, see the results in a few minutes or seconds, tweak and change the numbers or the assumptions, produce a new number, and prepare it and make it ready for submission. So this is the broad challenge that we seek to address. And in that, there is a deeper issue, which is that you can produce a singular output, no problem, but very often it's not explainable. You cannot defend that number adequately, let alone explain why it changed over the last period or against that last scenario. So therein lies the tale. So to kind of, this is a bit text heavy, but this kind of describes the day in the life of the analyst. Extraordinarily difficult to be able to cope with the variety of models that they have to implement with all of the attendant problems that I just alluded to. And it was our vision that can we build a platform using up-to-date modern technologies, notably using Apache Spark, which is commodity hardware, in-memory compute, extremely responsive even for the largest and most intractable compute-intensive problems. That's what we set out to do. And we said, this is what we'll do. We'll build explainer analytics to make risk finance and regulatory computations interactive, transparent, and self-explanatory. A mouthful, but each one of these is loaded in terms of its meaning and its intent and its value to these institutions, we believe. And what we said is we'll build a common platform upon which we will run many applications. And lo and behold comes along this delightful new regulation, delightful from our perspective, I dare say. But the regulation is called CECL, as I was joking yesterday, not to be confused with a little child named in the 50s. But the CECL regulation is the FASB regulation with regard to expected credit loss computation over the life of the loan, and every instrument has to be computed using these models. So it's a non-trivial regulation, and most bankers who are in this room ought to be nodding vigorously at this point, okay? But the platform itself lends itself, and it's designed to address something like CECL, and we'll speak presently about, which end of the spectrum of the banking community we deal with. But it also lends itself to stress testing and other burdensome, computationally intensive problems that are regulatorily driven that the industry faces. So, to summarize the problem statement, banks are swamped by the number of models they use, notably post-financial crisis. The regulators are not telling them exactly what to do. This is what may be called a principles-based idea. You're left to your own devices. You got to choose the methodology. You got to defend your methodology, in which case you got to compute, using methodology A and B before you come to a conclusion. The regulatory approach has shifted to an interactive dialogue in the sense that the regulator actually receives the submission and then says, hey, you know what, why don't you downgrade your CRE portfolio in this way, tweak your scenarios in that way, and can I have the result in the morning? So this type of interactive expectation of responsiveness on the institution's part is also a huge problem. And of course, along comes CECL and its international analog, which is IFRS 9. So what we've built is a product. We have built the platform and the application, as described here. To the left, we speak to the specific requirements of the reserve computational process, and to the right, we speak to the platform capabilities. We've been at this for around, I would say, 12 months now. The platform has been built out. It is, and I'll talk to you about the progress with customers at this point, but we are really ready for prime time in the sense that we can take on the largest global banks. We can take on a $1 trillion balance sheet with every class of lending that you're likely to encounter in the world and handle it inside the system, both for comprehensiveness on account of the algorithms and models required, as well as for the size and scale ambitions that these institutions require, inclusive of the interactivity demands that they may impose on us. So that's the key. That's pretty much built out and ready. So and if you were to think about us, really it would be about our core capabilities, which is we've got interactive compute nailed, and we've got the explanatory power, which is we can automatically understand the results of one computation versus the next, decompose the results, and produce the individual contributors that made the change happen, which really supports the CFO when they speak to the street and explain, or on the hook to explain what it is that has changed. So that's the capability we bring to the table. Who's the target market? The target market, delightfully, is everyone. Okay, which is every institution, because this is accounting. There's no cutoff. There's no kind of big banks have to do this and the small banks can get by with something. No, because it's accounting. And it's going to auto lenders have to do it. Just about anybody who puts a loan on their books has to account for it differently. And loosely stated, it is that on the day of booking a loan, on the very first day, you got to create a reserve for that loan. Crazy as that might sound. But that's the requirement that the accounting rules cause. Now, obviously, the demands and the requirements for the smaller institutions are going to vary considerably from the bigger ones. The expectation is that the bigger ones have the requirement, they would rather approach us as a platform provider so that they can solve the general class of problem that we speak about. And of course, the smaller institutions are more interested perhaps in an out-of-the-box CECL-oriented solution as a first step. The comparative positioning is here. Surprise, surprise, we are on the top right corner. So there's a very interesting dynamic here. We believe that it's not about producing that number. It's the way you produce the number so that you set yourself up so that the interactivity and the ability to react quickly and the ability indeed to produce that variance and attribution, which is extraordinarily difficult to do, but it is extraordinarily important, that differentiates us. So there are others that can actually produce the numbers, less so and more so per this chart, but we believe a combination of the platform strengths as well as the out-of-the-box solution capabilities are really what will, that which will set us apart. The application is complete and ready, and then we'll speak presently, as I said, about which banks are currently in pilot and beta. But I'll point your attention or draw your attention to the bottom right chart, which gives you the classical waterfall chart. It kind of says you had 100 million in the reserves last quarter, and you got 106 this quarter. That 6% variance ought to be explained. How much was caused by a change in the portfolio size? How did the portfolio degrade or otherwise? What was the maturity and tenor behavior different? And so forth and so on. So the decomposition of what changed is really a very difficult thing to do, and it's something that we do out of the box because we can understand both sides of the computational logic pretty well. The technology itself is Apache Spark, so I won't belabor the point, but it allows for us to approach this problem at an interesting new cost point. You don't have to buy a database. You don't have to buy expensive hardware, and therefore you can work on this open source technology and essentially ride the cost curve quite nicely and elegantly. Again, back to the current positioning, The larger institutions, as I said, we approach the market this way. The larger institutions are interested in a platform so that it solves the general cluster problem, and the smaller institutions are interested in the out-of-the-box app use. From the founding team's perspective, my own background, both in the technology as well as in and out of the financial institutions, I grew up. My first job was with Citigroup. I've spent 17 years doing a variety of roles internationally. Alok, my co-founder, has done. He's led the enterprise risk practice in this space in India. So we kind of bring together a fair amount of smarts around this, having experienced prior generations of this problem class. So we kind of have seen where the big issues are. So that's why I feel very fortunate to have teamed up with him. We are in we are in 2 tier 1 banks already, 2 out of the top 3 banks in the US, where we're doing a POC that's expected to move to a pilot. So that's we feel very good about that. We have 2 beta customers as well at this point, going live in the next couple of months. And we've signed a memorandum of understanding to take the product to market to the state and community banks with a New York City firm that deals with 800 such institutions for a deposit sweep product as well as for providing capital. So broadly speaking, they're analyzing the loan book anyway. Those are revenue projections expected to grow to 26 million in 3 years. The delight is that this is driven by the regulatory calendar, so everybody has to make a decision. So we are betting on the fact that we have a confirmed necessity to buy that we are working with. We are looking for $1.5 million to jumpstart our sales process with the credentials that come with the 2 tier 1s that we've already sold to. So with that, I would be delighted to meet any of you, many of you at the booth. And this is what we are, making risk finance and regulatory computations interactive, transparent, and self-explanatory. Thank you very much.
To introduce eGiftify, please welcome Jack Novielli, Executive Vice President of Strategic Product Integration at FIS.
Good afternoon. Excited to be here, excited to be part of the FIS program that's sponsoring this amazing structured event here in Little Rock, Arkansas. Having had the pleasure of dealing with each of these companies over the last 12 weeks, it's just been an amazing part of my tenure here at FIS. And to start that, I'm part of the Enterprise Product Group, and we are charged with helping introduce FIS to these 10 companies during the 12 weeks, both from a technology perspective, from a mentoring perspective in a number of different lines, helping them understand what their business propositions are, and just furthering the development of their ideas. A little bit of a backdrop about me. I recently joined FIS in January of this year. I worked at a financial institution in New Jersey for almost 40 years, and I left that institution to join FIS this year. I was the CIO and the Chief Strategy Officer for that organization. When I was given the opportunity to work with the Venture Center, to work with the creative group that we have here, it was truly a great experience for me. But one of the things that I tried to bring to the table, one of the things what we tried to do in the support of this program was bring a variety of talent to the table. As a former banker, and I think with 40 years I'll always be labeled a former banker, and even with FIS behind me, I think I'm the former banker in the team, right? The concept was challenging these 10 companies from a client perspective, having them think through what their solution means to a bank, what their creative thoughts would do to enable a bank. So we talked this morning, we talked throughout the program about disruptive concepts. I think FIS loves the idea of that process. Let's introduce disruptive concepts. Well, that's where the idea begins. I think what we tried to introduce in the process by leveraging our technology experts, by leveraging our business experts, is to transition that disruptive idea into identifying what problem does it solve, how does it enable a bank to do more, and what is the ROI or the business case for a bank to, absorb or consume those ideas or those thoughts. So in our discussions, and I've had the privilege, while I'm here to introduce, the last of the cohorts that's going to be introduced today, I've had the privilege of interacting with every single one of them. And I hope during that process I've added value by challenging them to think in the same lines as a customer would. What would be the questions a bank would ask? What would be the questions the customers of a bank would ask? Why is this important? How do I translate this into bank profit, right? So going beyond their initial thoughts, their initial dreams, their initial concepts, but trying to form that into a broader idea that has bigger legs, bigger strength, bigger opportunities for the people that we serve. Part of that here was introducing one of those enablers, and I use the word enabler, not disruptor anymore, because I think the solution that she brings to the table is an enablement solution. I'm here to introduce eGiftify. Susie Barakat comes to the organization, comes to the Venture Center with 15 years plus of financial services expertise. She's worked both in the technology fields as well as in the client service groups. She knows bankers, she knows customers, but the interesting part of her story is that she's solving her own problem. When she went out into the business world and started her own types of organizations, the restaurant fields, what she started to determine was, how do I play larger than what I am? Who's going to enable me to have my business grow? What are the tools I need? So through her leadership and her team, they identified eGiftify, which is a direct sales opportunity for merchants to provide branding opportunities and gift card solutions at the point of contact, with the prize at the back end to learn how their customers are using that information. So that business can continue to grow and feed itself through the information it garners through the gift cards and some of the other programs. Susie will go into a lot of detail as to the value of that. Why, at that point, since a successful business coming to the Venture Center, I give her a lot of credit in the concept that her entrepreneurial spirit suggested, how do I bridge and broaden this program? How do I work with organizations so that I can mass enable a much larger group of people? One of the things that we talked through was the opportunity to work with banks on the concept of creating a solution for loyalty for small businesses. White labeling her product through banks, solving a big problem for banking institutions in terms of how do I drive acquisition opportunities for small businesses and how do I retain them. I think you'll see in her presentation how her solution enables that, and at the end of the day becomes an opportunity for banks to drive bigger and broader profit margins and growth. So the circle between eGiftify, our banks, and then ultimately FIS continues to evolve. So without further ado, let me introduce Susie Barakat to provide you with in-depth knowledge of what eGiftify has to offer.
Thank you so much, Jack. I appreciate it. Thank you for that introduction. eGiftify helps banks and businesses increase sales and wow their customers across multiple channels so that they can build lasting loyalty. My background, as Jack said, is in fintech. I've worked with companies like Euronet, FIS, SunGard, and a few others to help banks launch new technologies across the world. But I actually built eGiftify because I was trying to find a solution and couldn't find one for my own restaurants a couple of years ago. My family has a group of restaurants. That's my dad, by the way. And they do a great job building relationships with their customers when they're on site. But we were missing opportunities by not being able to engage digitally with them. So I set out to look for a solution. Now, at that time, several big brands like Starbucks already gave their customers the option to be able to buy a digital gift card and pay from their phone. So I simply called their providers and said, hey, we would like to have the same thing. All 4 providers I called said no. They said we were too small and they weren't interested in our business. One went as far as to say that sometime down the road, they might actually develop a dumbed-down version for businesses like mine. So I was really amazed because coming from the fintech world where we had for years provided really good solutions to big banks, but then also the same solutions to community banks, I couldn't believe that that democratization of software was not available for small and medium-sized businesses in the hospitality and retail industry. And it wasn't just restaurants like mine that couldn't participate in this growing digital market, but there's 100 million small and medium-sized businesses around the world that still today can't participate in this market. And to put it in context how large this digital market is, last year 20% of Starbucks revenue came from prepaid digital gift cards alone, and that's 20% of $21 billion, and that's just one company. So the market was huge that we were missing out on, and we decided we had to build a solution for businesses like mine. Incidentally, banks are also missing out on a huge opportunity in the digital market, but I'm going to come back to that in just a minute. So we started building the digital gifting solution, and as we did, we realized that the problem was much bigger than that. Customers were expecting to be able to buy anything, anytime, from any channel, and they expected the solution to be seamless across websites, SMS, email, whatever it was. The problem for businesses is that they were already running multiple systems that did not speak to each other. They have Groupon running over there, a point of sale, they might have a credit card processing from a different vendor, and nothing was talking to each other, so deploying new technology made things even more difficult for them. And this wasn't only cost prohibitive, but also it really having the data separated across so many different systems made it impossible to truly understand who the customer was and how to relevantly engage with them so that you can drive real loyalty. So instead, we ended up building a full intelligent platform that brought together multiple solutions into one single point full of APIs so that we can actually connect and pull data in from other systems that were not ours as well, so that we could give businesses the ability to sell more, engage more, and be able to wow their customers in a very relevant way so that they could build real loyalty systems, not like their loyalty that isn't working really well for most businesses today. The advantage we had is that we didn't just get to build software, we actually had to use the software we built at our own restaurants. So we understood how simple the merchant and the customer experience had to be for this to be successful, because all this great technology means nothing if it can't actually be used by the merchant. So we built it much like your iPhone, all of the functionality in one very simple screen so that anyone can use it, even my dad. Even though it was based in London at the time, we decided to choose Little Rock to launch the beta. This was 2 years ago, and it did really well. We quickly grew outside of that market, and we have 300 different customers using it today, from the tiny, tiny boutiques and restaurants to well-known brands that you probably know. We work with Virgin Hotels, we work with the Howard Hughes Group, we work with Woodside, Valencia, multiple others. This is an example, Benchmark Resort, of a international client that has really pushed the platform to do a lot more than we originally intended it to. It's an international management group with 60 different locations, and they use eGiftify across their resorts to be able to increase sales and to drive customer loyalty and to increase the visitations across their different products. So it's been really great working with them, and we've been able to replace multiple vendors for them, in addition to give them reward and marketing capability across all channels to create a seamless customer experience regardless of which channel they were engaging with. So now we bring it to banks. Over the last year, we've had multiple banks come to us and say, how could we use this to engage our customers and reward them meaningfully, surprise and delight them with a cup of coffee for their loyalty, for example, or increase the engagement with a mobile app so that they could have relevant offers instead of things that they don't really want or need. As well, how could they actually be able to differentiate a commodity product that they're currently offering to their business accounts so that they can drive more business accounts into their banks. So here's how eGiftify works for banks, and here's how simple it is to increase sales, customers, and loyalty. And the way we do it is by creating a digital ecosystem where the bank really becomes a true partner to both their businesses and their consumers. So on the business side, we simply white label the eGiftify platform so that the banks can offer it to their businesses. And in turn, their businesses use it to sell their own branded gift cards, services, products, tickets, what have you, so that they increase their sales and increase their customer acquisition. Now, this in and of itself is super simple. Merchants can be onboarded within minutes with their own branded products, and they don't require any special software or hardware to do that. And this by itself is already a great value to the bank because it enables them to differentiate their solution to be able to attract new businesses. It increases revenues and fees, and it's really sticky, so it lowers attrition. But here's the really cool part. eGiftify can then take those same business offerings, gift cards, what have you, and be able to intelligently offer them to the bank's consumers as rewards or offers in a very individualized, personalized way, depending on that individual's relevance and preferences. And we do that directly through the bank's own mobile apps, their online banking, and their social media channels. So it really increases bank loyalty towards their consumers' bank loyalty towards their bank, and sets the bank to be able to really have a differentiating power in their community by bringing together businesses, consumers, and even charities into this new digital ecosystem. And for the consumers, it's really great because it gives them more reason to really engage with the bank's mobile app. I mean, today we look at our phone about 150 times a day, but we look at our mobile app maybe 5 to 10 times a month. And there's really not really great content in there for me to look at that any more than that. But if I was able to discover new businesses in my community, buy and pay directly from my phone, my mobile bank phone, and be able to receive individual rewards that I actually cared about, I would use it a lot more too. And the same technology can be used by the banks so that they can create really relevant cross-selling offers to their customers based on, for example, location. So if I'm at a car dealership, eGiftify would locate that and say, hey, Susie is at a car dealership, let's get her profile and actually offer me a car loan right then and there that I can purchase. We have a full stack of software behind all of this, very, very intelligent and very easy to integrate to the bank's existing system. It's very scalable, and it enables the bank to reach across channels using the same delivery engine. And this is a really simple project to implement. Working with banks in the past, I know some projects can be really long. This is not one of them. This is super quick to implement, and we provide the full implementation as well as the end-to-end marketing so we can help the bank roll it out to both their merchants as well as their customers. And the business model we use is very, very simple, very straightforward so that it's affordable for both the merchants as well as the banks. Installation, subscription, and transaction fee. We have been mostly selling direct, but we've just started selling through channel partners. We've just signed our first partnership with an Atlanta payments company that has over 150,000 merchants, and so we're really excited about expanding our footprint through them as well. And we're in discussions with many other fintech and payment companies to round off their solutions so they can bring more value to their customers as well. We couldn't do any of that without an amazing team behind us. My co-founder and CTO, Anurag Arya, is a brilliant architect and an API expert, and we have a full dedicated team behind us as well. And I can't say enough about our investment team, which is amazing. Many of them are well-known banking and fintech experts in the industry. You probably know a lot of them as well. So we've got a great team, a really powerful platform, and we're really excited about partnering now with banks to be able to make a difference for them and their community. I'd love to talk to you to explore how we could work together. And thank you so much for listening. I know I'm the last one, so I'm sure you guys are ready to get out of here by now. Thanks so much.
Ladies and gentlemen, please welcome former Systematic Senior Executive and the VC FinTech Executive in Residence, Collins Andrews.
Yeah, so executive in residence, what I have really done with these guys is I am the resident old guy for this group, and you can tell everybody here is quite young and they're fun to be around. And probably the other title is the resident dad. And frankly, I'm very proud of my kids today, and it's wonderful to get to see them here giving these presentations. So I had the chance to work with Systematics and Autel Information Services in the past. Actually, it was pretty far in the past now, but it has been a thrill to be a retired person and have the chance to come back to work. Even though the company is 10 times larger now than it was when I was there before, there's still a familiar spirit, a culture, and an enthusiasm that was there before, and frankly, it feels like home. There's a strong indication of the value of this program from the banks that we see come through here, particularly the reaction of these bank executives. When they hear the stories that you just heard, all of them that were here left excited about the companies and excited about the value of these products and services for their banks. And that excitement is directly tied to FIS. So that reflects very positively on the company, on its willingness to explore new ideas, its involvement, and this really unusual approach to explore new products and new technologies. And this would not be possible without the commitment of FIS as a sponsor, as an active participant in the program. And that active participation has been led by Rob Lee, who has the role in the company of Chief Product Officer for Banking and Payments, but he's also a true believer in the value of this program and the process. So please welcome the driving force for FIS in this accelerator, Rob Lee.
Thanks, Collins. Thank you, and thank you for not having a collective groan of one more FIS person coming up to talk. And I will be brief. I understand I'm between you and the beer. So just want to thank everyone in the room for your support. It's great to see a full crowd here. And thank you all, the entrepreneurs, the cohorts. It's been awesome. We started out in the beginning talking about themes, talking about broad themes. This is our second accelerator. The first time when you do something for the first time, you're sort of exploring the right way to do it. The second time, we spent a lot of time collectively, Lee and I and Collins and Jack and everyone that was involved, talking about what are the broad themes. And Anthony Jabor is here in the front. I work for Anthony. And Anthony gives us the ability to do this, frees up our time to do this. And one of the things that Anthony always says is we are the IT company for the banks that are our clients. So we're the $9 billion, $10 billion IT division for our clients. And we take that very seriously. And one of the things we think about is what are the trends, what are the new technologies, what are the themes that our clients should be thinking about, that we need to think about as well. So hopefully you saw some of those themes as you saw the presentations. If you think about the themes, Lee, if we go back to the discussions that we had, and we had a lot of active discussions right through this, where blockchain, big data, machine learning, speech is a primary input. I'm a big believer that 5 years from now, most of what we do with our devices will be through speech. The effectiveness is going way up. Accuracy is going way up. So those are themes. Those are broad themes. So when we talked about the businesses we wanted to bring in, the new entrepreneurs we wanted to bring in, we wanted to think of those themes, certainly related to the business that we're in. So I think this has been great. It's a great group of entrepreneurs. Last year was a great group of entrepreneurs. I was asked this morning, was last year better or worse or about the same? And I said, you can't compare them. They're all great. They're 20 great companies. I don't have the clicker, so go ahead and click it. So one segue from that is last year we had our Hypo network We chose 6 to participate, which is really a continuation of the program where they have a mentor and an advocate within FIS. We expose those entrepreneurs to other clients, and really ideally that will end up in a distribution agreement or a partnership. Today we'd like to talk and announce really formally Fund Seeder, which was in our Class 1. They are in the I&W group, our institutional and wholesale group. We've made an investment and we're partnering with them. And then Hexonica just finished up an investment or a partnership with them as well. So I'm proud to announce that today. And we'll be announcing our Hypo network in the second class within the next few weeks. So looking forward to that. Last, I'd like to really thank Collins. Collins is executive in residence and dad, and I count on him every day. We talk every day before the program, during the program, and we'll continue to talk. Lee, your team, Brian, Wayne, just awesome team. Jack Novielli, I don't know if Jack is here. Jack's done a great job. And I'd also like to point out Tom Chilton. So Tom, if you could stand up. Yeah, stand up. I don't know if you all know Tom, but when the governor and Gary say that they're doing this program, then they look at Tom and I to say, get it done, and then Tom and I get it done. So we try and get it done. So Tom, thank you for your partnership. He's with the Arkansas Economic Development Corp. And really has been instrumental in helping get this program done. So thank you very much. Thank you, Anthony, for your support, and look forward to next year's program.
Please welcome back to the stage the CEO and president of the Venture Center, Lee Watson.
Awesome. How about that announcement? That's pretty cool, right? Right? Rob, thank you for that. You know, I've absolutely enjoyed today. We're very proud of the hard work that these teams have made over the last 12 years. 12 years. God, it feels like 12 years, 12 weeks. And we're really excited about what the future holds. If you've enjoyed today's presentation, then I'd urge you to consider participating in the investment fund. Again, you can email me on that. Would love to talk to you. And have an opportunity to get a position into each company. It's been a fun 12 weeks. We've enjoyed watching the bankers react as each company has pitched their business. We've seen the CEOs mature their ideas, refine their messages, and build lasting connections with each other. Monday's going to be awfully quiet, but the calm won't last for long. As we gear up for the next pre-accelerator that starts in September, our next Jolt Hackathon, and in less than a month, applications will open for the 3rd VC FinTech program. Again, thank you to all of our partners for their incredible support. Everyone's listed here today. Lou McAllister and his team have dropped in some awesome internet so we can tweet, Snap, and Instagram and do all of those great things. And Carolina Cruz, who's the director of the Emerging Analytics Center out at UA Little Rock, is here with her team, and they've set up a demo with one of the companies out back. So now I'd like to invite all of the participants, Rob and Jack and Collins and Wayne and Brian, join me up on stage. This is the gong. This is you. So you all saw in the video that the governor rang the gong when we started this program 12 weeks ago. And it's important in this entrepreneurial culture to celebrate successes and to relish every moment. And so as the teams line up on stage, the honor of ringing the closing gong to this year's program goes to Rob Lee. All right, everybody up here.
Ladies and gentlemen, please join us in congratulating the 2017 VC FinTech portfolio companies. All right. This officially concludes the Venture Center's 2017 VC FinTech Demo Day. Thank you all for joining us, and we look forward to sharing demonstrations and libations out in the entrance to the Great Hall. So make your way out there and learn all about these companies.